Speaking at the Bloomberg Global Invest Conference, says the recent rally cannot be justified by corporations' profit potential.
The equity market does seem to be a little bit ahead of my view of the future earnings performance of businesses as we look 6 to 12 months out. And if that's true and I'm right about that, you'll see a rebalancing of that over time.
We also caught up with Bridgewater Associates' Bob Prince, the co-chief investment officer of the world's biggest hedge fund, says the impact of the coronavirus pandemic could be long-lasting.
The problem then is that we're talking about the virus, which has a time frame of probably 18 to 24 months. And so I refer to that as a duration mismatch, essentially the time frame of the virus impact on spending and income in relation to the time frame of how long people can last.
And Prince also said that Ray Dalio, Bridgewater's billionaire founder, still believes that cash is trash, meaning that people should stay invested in markets.
And we'll get more evidence on how the pandemic has affected the U.S. economy. Economists are forecasting workers filed another 1.3 million jobless claims last week. Bloomberg's Vinny Del Giudice reports.
States have processed almost 50 million claims since mid-March, the result of COVID-19 shutdowns, cost-cutting, and business failures. Bloomberg Economics says jobless claims could start to ebb after emergency aid of $600 a week winds down. Our economists note a recent congressional study suggests extending payments beyond next month would leave many workers better off staying home, curbing incentives to seek another job. Vinny Del Giudice, Bloomberg Daybreak.
All right, Vinny, thank you. That report due out at 8:30 a.m. Wall Street time, as well as the latest reading on U.S. economic growth. Economists are forecasting GDP contracted at a 5% pace. That would be the steepest drop in more than a decade.
The Federal Reserve releases results of its annual stress test on the largest U.S. banks today. That story from Bloomberg's Charlie Pellet.
The tests measure the bank's ability to weather a financial crisis, and for the first time, they'll include a sensitivity analysis to gauge how well banks can navigate an economy shattered by the coronavirus. The findings could feed a growing clamor for the biggest banks to suspend or cut dividend payments after they temporarily quit share buybacks for this quarter. The stress test began in 2009 as a tool to help avoid another financial crisis. Charlie Pellet, Bloomberg Daybreak.
All right, Charlie, thank you. LeBron James is speaking exclusively with Bloomberg. The NBA star and his business partner, Maverick Carter, sat down for a wide-ranging interview with Bloomberg's Jason Kelly. It's part of this week's cover story for Bloomberg Business Week, where James and Carter discuss their joint business ventures, the pandemic, and the need for change after the killing of George Floyd and the protests spurred by his death.
There's been a lot that's gone on in 2020. We're still trying to make the most of it and continue to be powerful and continue to be heard, and using this as an opportunity for the better of change.
And we'll bring you more of our conversation with LeBron James in just a few moments. S&P futures are lower, down about 9 points right now. Dow futures are down 87. NASDAQ futures down 4. 10-year Treasury up 3/32, yield 0.66%, and the yield on the 2-year 0.18%. The euro 1.1229 against the dollar. Straight ahead, we have the latest world and national news. This is Bloomberg.
All right, thanks, Karen. It's 6:07 on Wall Street, and Amy Morris is here with more on what's going on around the world. Good morning, Amy.
Good morning, Nathan. We have been telling you about the spike in coronavirus cases in different states in the southern and western parts of the United States. Well, now there's a travel advisory for any visitors from hotspots to New York, New Jersey, and Connecticut. New York Governor Andrew Cuomo.
We're announcing today a joint travel advisory. People coming in from states that have a high infection rate must quarantine for 14 days.
Cuomo says they have to make sure those rates continue to drop, and that is what keeps him up at night. 5 upstate New York regions are on track to re-enter phase 4 of reopening tomorrow, including Finger Lakes, Central New York, Mohawk Valley, Southern Tier, and North Country. New York Governor Cuomo says the state's hospitalization numbers continue to dip.
The number of hospitalizations is 1,071. That's the lowest level of hospitalizations we have seen since this nightmare began.
Now, phase 4 allows low-risk outdoor arts and entertainment, zoos, botanical gardens, some indoor venues like museums and aquariums at lower capacity, professional sports without fans, and higher education and film production can also resume. If the federal government doesn't come through, New York's Metropolitan Transportation Authority might have to consider cutting its workforce, reducing service, and deficit borrowing. The transit system is asking for another $3.9 billion in federal funds to help cover lost revenue through the end of this year. Congress is in a standoff over police reform in the U.S. While the president accuses Democrats of trying to weaken the police, Democrats say Republicans' bill did not go far enough. Republican Senator Tim Scott and Democratic Senator Doug Jones each accusing each other of playing politics.
They cannot allow this party to be seen as a party that reaches out to all communities.
This was just a way for Senator McConnell to blame Democrats for blocking things.
The House votes on the Democrats' proposal later today. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
Okay, Amy, thank you. It's 6:09 on Wall Street. It's time for the Bloomberg Sports Update. Here's John Stashower.
Thanks, Nathan. Golf has been back for a few weeks now. The first tournament went smoothly, not a single positive test for COVID. Last week there was one, Nick Watney. The tour is now in Cromwell, Connecticut. The Travelers tease off today. Another player, Cameron Champ, tested positive, and so have the caddies of both Brooks Koepka and Graham McDowell. So all three of those players have withdrawn. PGA Commissioner Jay Monahan admits they've become too lax. He worries about caddies exchanging clubs with players. And what is hardly a surprise, the New York City Marathon, which was to be November 1st, canceled. Over 50,000 runners, upwards of 2 million spectators. Not a good recipe in these times. It was to be the 50th anniversary of the first New York City Marathon. The only other time it was canceled was 2012 after Hurricane Sandy. We'll find out soon what the Met and Yankees schedules will look like for this shortened 2020 season. 60 games in 66 days, 40 games within the division, 10 against each team, and 20 other games versus the other league's Eastern Division. So there will be some Subway Series games, though no fans will be going to the games, and no games with long travel involved. 2 NBA players have tested positive. Jabari Parker of Sacramento, Indiana's Malcolm Brogdon. Avery Bradley will not be part of the NBA restart, even though he had a chance to win a championship with the Lakers. His 6-year-old son has a respiratory problem, would not be able to travel to Orlando. Bradley did not want to leave him for what could be a few months. The Lakers might replace Bradley with J.R. Smith, the ex-Knick who played with LeBron James in Cleveland. John Stashower, Bloomberg Sports. Nathan.
All right, John, thank you. And while you may not be able to go to baseball games in the shortened season, Mr. Met, Philly Fanatic, and Wally the Green Monster will. Mascots are getting a reprieve from MLB when it returns to action next month. The mascots are in play, just not on the field along with the players. Stay with us for more from our exclusive wide-ranging interview with basketball star LeBron James as he speaks with Bloomberg Business Week about his new media venture and boosting representation in the entertainment world. Ahead of that, futures are pointing lower this morning. Dow futures down 106. NASDAQ and S&P futures both down about 10 points. And you're listening to Bloomberg Daybreak on this Thursday morning.
For the Jewish Communal Fund, Noel Spiegel, former senior partner with Deloitte & Touche and past JCF president, discusses the advantages of a donor-advised fund over a private foundation.
There's a lot involved in having a private foundation. You need to engage attorneys, you need to engage accountants, file tax returns. At JCF, all of that is done for you. You don't have to get involved in anything other than making your contribution to your fund and then determining which grants that you want to make.
A JCF fund may be opened with a minimum $5,000 contribution of cash or appreciated securities and can be used as an alternative to or together with a private foundation.
If you have a foundation, you have to list all of the contributions that you made. Potentially anybody, because the information is public, can find out exactly which organizations a foundation has made charitable contributions to.
Let JCF simplify your philanthropy and protect your privacy. Learn more about JCF's private client group at jcfny.org.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment. Feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
At Halfords, we're here to get you where you want to be. We can replace your battery at over 700 stores and garages, or even at your home or work with our mobile experts, so you can enjoy an engine that starts first time, every time, and start enjoying the open road again.
Are we nearly there yet?
From battery replacements to tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
B. Stroud Watts.
It's bringing Victoria Fernandez, who's been betting on tech among other sectors through this course of volatility. Victoria is a chief market strategist at Crossmark Global Investments. They manage $5 billion in assets. Victoria, great to have you. And I was just looking through some of your picks, which include adding to positions when it comes to Amazon. It feels like this kind of tug of war that's still going on with the rotation story in the market. Is there still a big question mark as to what stocks benefit when we get to normal, and of course what the new normal actually looks like?
Well, Heidi, I think you're absolutely right. It is a question of what does the new normal look like. And instead of making a bet on a COVID-19 play per se, we're actually looking at things that have evolved through COVID-19, but we think are going to be longer-term trends that continue after we get back to whatever we consider that normal. And that's why we've been focusing on some of those secular growth stories. So, yes, some of the names like Amazon and Apple that we've had in the portfolio, we've added to on some pullbacks, but we're also looking at names in data infrastructure space like American Tower. I mean, we see how people are continuing to use more and more data. We're looking at how people are beginning to work from home.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Futures lower this morning. S&P futures down about 10 points. Dow futures down 95. NASDAQ futures down about 9. 10-year Treasury up 430 seconds, yield 0.66%. And NYMEX crude oil down 1.1% or 41 cents at $37.60 a barrel. That's a Bloomberg Business Flash. Now here's Amy Morris with more on what's going on around the world. Amy.
Karen, the coronavirus wave continues across parts of the U.S. Arizona, California, Texas, and Florida seeing spikes, leading to the state of New York, New Jersey, and Connecticut to require visitors from hotspots to quarantine for 14 days. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
Amy, thank you. It's 6:18 on Wall Street, live from the Bloomberg Interactive Brokers Studios. This is Bloomberg Daybreak, and LeBron James is speaking exclusively with Bloomberg. The basketball star and his business partner, Maverick Carter, sat down for a wide-ranging interview with Bloomberg's Jason Kelly. It's part of this week's cover story for Bloomberg Business Week, where James and Carter discuss their joint business ventures, the pandemic, and the need for change after the killing of George Floyd and the protests spurred by his death. Let's listen to more of that conversation now.
LeBron, I do wonder, I think back to 2014 and Eric Garner and the T-shirt that you wore, and the NBA has consistently stood behind you and its players in terms of protests. Other leagues have not done that, most notably the NFL. Now the NFL has changed its tune. What do you make of that?
I do know one thing I can speak from is what I'm a part of. And I'm a part of a league with a great commissioner in Adam Silver, and he's always listened to the voice of his players. And I've always respected him for that. He's given us an opportunity to, when we feel something that's very wrong with society, that's very wrong with what's going on in our communities, that we can speak upon that and use the NBA shield to back us. And I have nothing but respect for Adam Silver. As far as the NFL, I'm not in those locker rooms. I'm not with those guys, but I do understand that an apology, I have not heard a true official apology to Colin Kaepernick on what he was going through and what he was trying to tell the NFL and tell the world about why he was kneeling when he was doing that as a San Francisco 49er. So I just see that to still be wrong. And now they are listening some, but I still think we have not heard that official apology to a man who basically sacrificed everything for the better of this world. So I can say that about that.
And Maverick, I wonder about the Kaepernick issue from your perspective, knowing the business world, the endorsement world, the economic element of this. How does that change going forward, given that I think it's fair to say Colin Kaepernick was vindicated in a lot of senses?
Yeah, well, I think, the fact of the matter is Colin Kaepernick did what was on his heart. He did what he felt was right. He took all the right steps. People always obviously look over that he met with the military. I think it was a Marine or maybe even a Navy SEAL that told him sitting was the wrong thing to do, that he should kneel. That's where he actually got the idea. He took the right steps. But I think as black people, we've been ringing this alarm for a long time. And the rest of the country who are, I happen to believe most people are good, so who are not even racist, have just been hitting snooze on it because it's just the system has been set up in a way that even if you're not racist, right, that you still perpetuate a system that oppresses black people. And I keep telling people bias and racist get the same results. So if I worked at Bloomberg and you just gravitate as a human to the people who went to the same school as you, drink the same beer as you, go to the same place to hang out as you. So therefore, you don't have to be racist to still be in a system that oppresses black people. And I think, we've been saying this a long time, that it's in the fabric of America. It's in the DNA. It was actually designed that way. And unless we actually stop and really make hard turns and changes to reverse the social, political, and economic systems, then it's still going to go on. And many people go, well, I'm not racist. And I go, you're not. But you still have benefited from a system and perpetuated a system that oppresses black people. So I think Colin definitely championed that in a big way. But this has been going on for hundreds of years, and black people have been saying this for hundreds of years.
All right, now let's bring in the man who interviewed both LeBron James and Maverick Carter there. Jason Kelly, the co-host of Bloomberg Business Week. Wow, what a fascinating conversation, Jason. And it really gets to the heart of the challenge, I think, not just in sports, but as Carter mentioned, in the business world as a whole, about how it's going to be so difficult to change mindsets when it comes to race.
It is, and you're absolutely right, Nathan, and thanks so much for having me. It's great to hear your voice. It's such an interesting moment for these guys because they have built something that is meant to have some of those hard conversations and help us make a lot of those hard turns, because part of it is about representation, and you heard both of them speak about Colin Kaepernick. What's interesting to me about this, Nathan, in some ways, is I think you can make a strong argument that there is no Colin Kaepernick, or the Colin Kaepernick that we know, without LeBron James in many ways. He has set a platform in many ways and sort of set the mold for player empowerment that has led to athletes being these cultural role models. You can also make an argument that LeBron James picks up where Muhammad Ali leaves off in many ways. And so sports and culture, you and I know this so well, it is the nexus of which so much of what we discuss has to happen and can happen because those voices are louder and louder.
And now LeBron James is hoping to broaden his platform into this media empire that he's formed with Maverick Carter. What kind of groundwork are they laying for what they plan to do?
Well, what they're really laying, Nathan, is this notion that there's a whole category of folks from a creator's and a consumer's perspective who've just been largely ignored or pandered to or certainly underserved. And so what they're looking to create, and there are shows out there already, you look at what's going on Netflix, there's a show called Self-Made starring Octavia Spencer. You look at The Shop on HBO. These are voices and faces that have not been heard and seen, and that's a big part of the thing that needs to change. That system that you heard Maverick Carter talk about is largely based on exclusion, and so inclusion and representation are a huge part of this, and that's what they're trying to do.
And we're going to hear more of this throughout the day here on Bloomberg Radio. Jason Kelly, co-host of Bloomberg Business Week, along with Carol Massar. Great to hear your voice this morning as well. Thanks for your insights on this fascinating conversation with LeBron James. You're listening to Bloomberg Daybreak.
This is a Bloomberg Money Minute. Investors are taking stock of a big drop on Wall Street yesterday over worries about the rise in coronavirus infections in some parts of the country. The Dow slid 710, the S&P fell 81, the Nasdaq tumbled 222 points. The latest jobless claims report is out before the opening bell today. It's expected to show a continuation of a downward trend, but still another 1.3 million Americans seeking first-time unemployment benefits. Bayer says it's taken a major step toward wrapping up litigation over its Roundup weed killer with a settlement of almost $11 billion. But the company still faces about 30,000 unresolved cancer claims that could cost billions, and lawyers vow even more suits. Apple is closing 7 stores in Houston because of a recent spike in COVID-19 cases, bringing the number of locations that have been shut after reopening to 18, but the majority of its 271 U.S. stores have reopened. Gina Cervetti, Bloomberg Radio.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
NJIT.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
This is a message from the government. Some businesses are now able to welcome back their employees and customers. To keep everyone safe, it's important you follow government guidance and make your workplace COVID secure. Businesses should carry out COVID-19 risk assessments, put in place hygiene procedures, and help staff and customers keep a safe distance. Talk to your employees, listen to their concerns, and if possible, help them to work from home. Every workplace is different, but by following this guidance, you can get back to business safely and play your part in managing the risk of infection. Visit gov.uk/working-safely for more information. Stay alert, control the virus, save lives.
At Harford's, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again. and surprise that special someone.
Happy birthday!
From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
At Honda, we've never looked to other car companies for inspiration. No, it's not a matter of an inflated ego. We just prefer listening to what people really need. For example, the new Honda Jazz Hybrid doesn't have the expected 6 airbags. It has 10, including one that prevents the driver and passenger from colliding with each other. And because we also listen to our conscience, all our safety features come as standard. No charge. Honda, the power of dreams.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We're just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. U.S. futures are lower following yesterday's 2.6% decline for the S&P 500. The drop comes on renewed concerns over the coronavirus. And we get the latest live from Bloomberg's John Tucker. John.
And Karen, Florida and Texas each hit records for cases Wednesday, with health officials in Houston saying their infrastructure was overwhelmed. Arizona reached a peak in hospitalizations. In California, which also saw an all-time high for new infections, Walt Disney delayed the reopening of its theme parks indefinitely, while Nevada's governor ordered everyone to wear masks in public. The U.S. recorded more than 34,500 new infections for a second day. New York, New Jersey, and Connecticut set quarantines for incoming travelers from hot zones, and North Carolina put its reopening on hold. John Tucker, Bloomberg Daybreak.
All right, John, thanks. In 2 hours from now, we get another indication on how the coronavirus has impacted the U.S. economy. GDP is estimated to have contracted at a 5% pace. As Bloomberg's Vinny Del Giudice reports, that would be the steepest drop in more than a decade.
Today's GDP data will be bleak, but the second quarter's plunge could be 9 times worse, reflecting the deadliest day so far of COVID-19. Projections from the Atlanta Fed suggest the economy contracted by a record 45% in April, May, and June. Third quarter GDP could retrace some of the historic losses as the economic deep freeze starts to melt away. Vinny Del Giudice, Bloomberg Daybreak.
And Vinny, economists also forecast workers filed another 1.3 million jobless claims last week.
Nike reports fiscal fourth quarter results today after the close, and Bloomberg's Larry Kofsky has a preview.
Nike's results will be marred by the spread of COVID-19 outside Asia. Analysts are forecasting a 24% sales decline and a profit of about 10 cents a share, but estimates vary widely. Bloomberg Intelligence says the consensus sales estimate may be too conservative given store closings in North America, Europe, and Asia. That excludes China, where robust sales gains will provide a partial offset. Inventories remain a concern amid a slowdown in wholesale orders and with store inventory stagnating. Larry Kofsky, Bloomberg Daybreak.
All right, Larry, thanks. And in Europe, Wirecard has filed for insolvency following the arrest of its CEO amid a massive accounting scandal that left the German payment processing firm scrambling to find more than $2 billion missing from its balance sheet. The stock is down another 76% this morning. Futures are lower as well. S&P futures down 7 points, Dow futures down 84. NASDAQ futures little change to lower. Straight ahead, the latest world and national news. This is Bloomberg. At 6:33 on Wall Street, we bring in Amy Morris for more on what's going on around the world. Good morning, Amy.
Good morning, Nathan. As coronavirus cases continue to surge in states across the country, the numbers are going down in New York, New Jersey, and Connecticut. And leaders there wanted to stay that way. They put in place a travel advisory for any visitor from a known hotspot to quarantine for 14 days. New Jersey Governor Phil Murphy.
We have taken our people, the three of us, these 3 states, through hell and back. And the last thing we need to do right now is to subject our folks to another round.
The list of states impacted by the travel advisory will be updated daily. As the numbers across New York State go down, more places are reopening. New York Governor Andrew Cuomo says they keep an eye on the data.
All the regions are constant since the reopening, including New York City, which we're watching very carefully. But we watch it on a day-to-day basis, and right now all the numbers look good.
5 upstate regions are now on track to enter Phase 4 tomorrow. Finger Lakes, Central New York, Mohawk Valley, Southern Tier, and North Country. Phase 4 allows for zoos, botanical gardens, aquariums, and museums to open at lower capacities. And it allows for film and movie production, higher education, and professional sports without fans. But not for malls, movie theaters, and gyms. Those businesses had been hoping to be included in Phase 4 after they were shut down for 3 months. That decision leaves business owners uncertain of when they can welcome back customers. Senate Democrats have voted down a Republican effort to open debate on a GOP police reform bill. Democratic Senator Doug Jones and Republican Senator Tim Scott, who led the efforts on the legislation, each say the other side is more worried about the November election than true reform.
He knew that this vote was going to fail. He wanted us to make a political point. That's what Senator McConnell often does, especially as you're moving into an election season.
Instead of going forward and getting what you want now, they've decided to punt this ball until the election.
The House votes on the Democrats' measure today. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
All right, Amy, thanks. It's 6:35 on Wall Street. Now time for the Bloomberg Sports Update and John Stashauer. Good morning, John.
All right, Nathan. Sports clearly coming back in August. We're going to have baseball, both NBA and NHL playoffs going on, but it's not as if the virus is going away. And the sports world right now has its share of positive tests. 2 more NBA players, Sacramento's Jabari Parker and Indiana's Malcolm Brogdon. The day after we learned of Denver All-Star Nikola Jokic. The Phillies have 7 players with COVID. The Rockies have 3, including star outfielder Charlie Blackmon. The Red Sox, Tigers, and Mariners all have at least 1. The plan is to test MLB players every other day. And 4 golfers won't play the tournament that begins today in Connecticut. 2 have tested positive, Nick Watney and Cameron Champ. And 2 others, Brooks Koepka and Graham McDowell, have withdrawn because their caddies have it. PGA Commissioner Jay Monahan admits they must be vigilant.
If we can properly socially distance, if everybody is when they're inside is wearing a mask and doing all the things that we've outlined from the outset, we continue to stay true to what we've said. We feel like, we're going to be in a position to sustain our return.
For only the second time in its 50-year history, no New York City Marathon canceled. It was to be November 1st. The other cancellation was 2012 after Hurricane Sandy. The Knicks have hired William Wesley to their front office, known in NBA circles as Worldwide West. He worked previously with Leon Rose when he was an agent. Rose is now the Knicks president. Wesley said to be well connected with NBA players, coaches, and agents. Rose, in a rare interview, says he hopes to name a new coach within the next month. Jerome McGinley, a 50-goal scorer with Calgary, just the second African-American NHL player to be named for induction to the Hockey Hall of Fame. John Stashauer, Bloomberg Sports. Nathan?
Thank you, John. It is 6:37 on Wall Street.
The following commentary is from Bloomberg Opinion.
COVID-19 masks aren't a political statement. I'm Tara LaChapelle, a columnist for Bloomberg Opinion. The AMC movie theater chain initially said that it wouldn't require guests to wear face masks because it didn't want to be drawn into a political controversy. That kind of thinking will make it more difficult to get the pandemic under control and restore the economy. Wearing a mask isn't a political statement, and it's dangerous for corporate brands to suggest it is. Despite mixed messages from government leaders early on, there is little doubt now that masks help minimize the spread of the coronavirus. A study in Health Affairs found that as many as 450,000 cases may have been prevented because of state mask mandates. Masks are also best worn in crowded places where you'll be for a long stretch of time, such as a movie theater. AMC has since changed its stance and will require them to be worn at its cinemas. Businesses that don't risk making customers nervous to venture back out again. I'm Tara LaChapelle. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
You can hear Bloomberg Opinion commentaries every weekday at this time, and terminal customers can read more at OPIN Go. Apple says it is closing 7 stores in Houston because of the recent spike in COVID-19 cases there. The story from Bloomberg's Charlie Pellet.
The iPhone maker says it is taking the action out of, quote, an abundance of caution.
Last week, the company closed 11 stores across Florida, Arizona, North Carolina, and South Carolina that had been reopened earlier. Despite the renewed closures, Apple has reopened the majority of its 271 U.S. stores. Charlie Pellet, Bloomberg Daybreak.
Thank you, Charlie. It's just before 6:39 on Wall Street. Time now for the Bloomberg Green Report. Here's Jeff Bellinger.
Amazon.com has a big carbon footprint, and the e-commerce giant wants to eliminate it. Amazon is investing $2 billion in sustainable and decarbonizing technologies, and the team running the fund will have a mandate to back industries that are working to reduce greenhouse gas emissions. Industries from transportation and manufacturing to energy production and agriculture could share in the funding. Amazon also announced a more aggressive schedule for powering its operations with renewable energy sources. Amazon CEO Jeff Bezos unveiled a climate pledge last year, committing the company to meeting the goals of the Paris Climate Agreement a decade early. Amazon's Seattle area neighbor, Microsoft, announced a $1 billion climate fund earlier this year. Microsoft's investments will focus on technology to remove or reduce carbon from the Earth's atmosphere, enough to erase the impact the company has had since its founding in 1975. Jeff Bellinger, Bloomberg Radio.
Okay, Jeff, thanks. Now some other stories we're following. Bayer has agreed to spend more than $12 billion to resolve thousands of U.S. lawsuits the German chemical giant inherited in its acquisition of Monsanto. Agreements were reached on about 95,000 claims filed over the widely used herbicide Roundup. And the parent of the Chuck E. Cheese restaurant chain has filed for bankruptcy protection. CEC Entertainment is the latest in a string of companies that have been hammered by the coronavirus pandemic. It was acquired by Apollo Global Management in a 2014 leveraged buyout. CEC has more than 600 Chuck E. Cheese outlets and more than 120 Peter Piper Pizza locations. S&P futures down 10 points. Dow futures lower by 122. NASDAQ futures a drop of almost 7 points. You're listening to Bloomberg Daybreak.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Pursuits look at luxury.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the the academic excellence for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
Well done, you. You finally completed that DIY. But don't stop there. A better bed makes a better you, and you've earned it. Pop into Dreams. They'll find you your perfect mattress with this clever bit of technology called Sleep Match. It takes just 3 minutes. They've introduced safe shopping measures like hand sanitizer, face masks, distance markers, and your own single-use pillow and mattress protectors. Dreams are bound to find you the perfect bed for a great night's sleep. Stay safe. Sleep well. Dreams.
You know that feeling when you get more than you expected? Like when your week off is forecast warm and sunny. Or when there's an extra unclaimed sausage left on the barbecue. Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that feeling. Nice, isn't it? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
It's not business as usual right now, but Square has tools to help your business adapt. Like Square Online Store. You can start selling online in a few easy steps with pickup, delivery, and shipping options. And if you are selling in person, you can take contactless payments with hardware like Square Reader and Square Terminal. You'll get your money the very next business day, so you can put it to work. All these Square tools work together, no matter where you're selling, and there's never hidden fees or long-term commitments. Find out how Square can help you get back to business by visiting square.com/UK. Square Up Europe Limited is regulated by the Financial Conduct Authority for the provision of payment services.
News and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
New York, Connecticut, and New Jersey are asking visitors from states with high coronavirus infection rates to quarantine for 14 days. Sporting a mask could save tens of thousands of lives in the U.S. Correspondent Barbara Cusack has the latest coronavirus numbers.
Experts now forecast there will be more than 179,000 COVID-19 deaths in the United States by October 1st. The University of Washington's Institute for Health Metrics and Evaluation projects that a universal mask-wearing order, though, in the U.S. could save as many as 33,000 lives. The Institute's Dr. Chris Murray said wearing a mask is extremely low cost and for the individual provides a 1/3 to as high as 1/2 reduction in the risk of transmission. I'm Barbara Cusack in Washington.
Shares are lower in Asia after a sell-off on Wall Street as new coronavirus cases in the U.S. hit their highest level in 2 months. I'm John Trout.
It's a new disease making an unprecedented impact.
The job losses were widespread.
It is a stunningly historic moment. Your best strategy?
Is this a market that's accepted reality?
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are slipping while European shares advance as investors study whether a resurgence in coronavirus infections will sap appetite for riskier assets. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are down about 9 points. Dow futures down 104. NASDAQ futures down 1. The DAX in Germany's up 0.25%. 10-year Treasury up 5/30 seconds, yield 0.66%. The yield on the 2-year 0.17%. NYMEX crude oil's down 1.2% or 45 cents at $37.56 a barrel. COMEX gold is down 0.25% or $4.40 at $17.70 an ounce. The euro 1.1213 against the dollar. British pound 1.2424 and the yen 107.27. That's a Bloomberg Business Flash. Now here's Amy Morris with more on what's going on around the world. Amy.
Karen, the COVID-19 pandemic is now predicted to kill 180,000 Americans by October. Surging case numbers moved New York, New Jersey, and Connecticut to put a travel advisory in place to quarantine visitors from hotspots to their states for 14 days. The Pentagon has released a list of 20 companies it says are owned or controlled by China's military, including Huawei Technologies. And Joe Biden now leads in 6 states that were key to President Trump's 2016 election victory. A series of New York Times Siena College polls finds Biden's lead can range from 6 to 11 percentage points in Arizona, Florida, Michigan, North Carolina, Pennsylvania, and Wisconsin. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
Okay, Amy, thank you. We are live from the Bloomberg Interactive Brokers Studios, where it's coming up to 6:49 on Wall Street. Time now to check what's going on in D.C. Some of the top stories from the nation's capital include Democrats being told to stay home during their national convention in Milwaukee in August due to the pandemic. Dozens of Secret Service employees under self-quarantine after 2 agents tested positive for coronavirus at that Tulsa rally. And President Trump heads to Wisconsin today on the heels of new polling that shows him behind in that state and several others against Joe Biden. Also making news, the House voting today on a Democratic police reform bill after Democrats blocked a competing measure in the Senate. Let's get more now from Bloomberg News politics editor Kathleen Hunter. And, of course, this comes at a really interesting time, Kate, with activists on the streets demanding change in police practices and both parties sort of calculating the way forward here.
Yeah, absolutely. And I think what we're seeing here is both sides really saying that they think something needs to be done, or acknowledging at least that some changes could and maybe should be made to policing in the U.S., but disagreement about the extent to which the federal government should require that change of states and localities, with the Democrats kind of wanting to impose some more stricter requirements on states and Republicans not wanting to go as far. And so now what we're seeing is the standoff that's playing out. Democrats are making the calculation that they are going to get the upper hand by insisting on stronger requirements and blocking what they've described as legislation that doesn't really have any teeth, whereas Republicans, and particularly the White House, are really doubling down on their law and order approach, with the president essentially accusing Democrats with their proposal in the House of trying to weaken the police. And so I think that's the dynamic that's really in play now, and the end result is going to be that not much maybe will happen on this front.
Yeah, and as you say, the president is taking this sort of law and order approach, really taking a hard line when it comes to police reform as he tries to get his campaign back in swing during the pandemic. As we mentioned, he's heading to Wisconsin today, and we've been talking for the last day or two about this New York Times Siena College poll that shows him trailing Joe Biden significantly nationally. Now we're learning he trails in Wisconsin as well.
That's right. And, there were some polls earlier this week that showed him trailing in Wisconsin. And there's one out this morning, the latest New York Times Siena College look at battleground states that shows Trump actually trailing Biden now by 11 points in both Wisconsin and Michigan. So now double-digit lead for Biden there. And that also shows that that same poll also shows Biden leading Trump by 10 percentage points in Pennsylvania. And those 3 states are 3 that really Democrats have been looking at as being potentially key to winning the White House in 2020. There are 3 states that Trump, I think, much in a surprise to many Democrats in the Clinton campaign, pulled off wins in 2016. And I think the sense among Democrats is they really need to win back those states if they have a shot of beating Trump. So this poll is certainly a good sign for them.
Yeah, and it points to a really interesting dynamic in the race right now, doesn't it? Because when you look back to 2016, all the polls showed Hillary Clinton leading in many of those battleground states. The president, then candidate Obama, the outsider at the time, eventually ended up turning things around and winning the White House. And now it seems like the president is running as an outsider again as he tries to seek re-election. It's really fascinating to watch.
It is a really interesting dynamic, Nathan, and as you pointed out, it's different from the kind of dynamic that we normally see when an incumbent president is on the ballot. But these are, to put it mildly, very unusual circumstances across the board, and I think that Trump is still, compared to Biden, someone that is it's legitimate for him to say that he's in many ways more of a Washington outsider than Biden. Joe Biden was in the Senate, for close to 4 decades, and then obviously served 8 years in the Obama administration. And so I think that Trump is really trying to play on that. And Biden, for his part, is trying to, emphasize the experience that he has and say that he's, with someone who can be a steady hand on the U.S. government, on the federal government at a time of, multiple crises that the U.S. is facing. And so I think the, sort of calculus has really shifted this time around, and we're seeing, Biden having an advantage in playing kind of the inside game, and Trump, doubling down on this outsider status, which is, again, kind of unusual given that Trump's the current president.
Right. And, given the fact that 3 or 4 years ago, the president ran on "I alone can fix it," you wonder, he's running for a second term. Can that message, "I alone can fix it," work after he's had, almost 4 years to try?
Well, and that's the corollary there, is that, for Trump, this is a much more difficult argument to make this time around because, he's had 4 years in office to prove that he's the person that can fix it. And, just even the idea that earlier this campaign season, his campaign was looking at, making their slogan, instead of "Make America Great," it's, going to be "Keep America Great." And now they're kind of reverting back to this idea of, the "Make America Great" again slogan. And so I think that shows that even they acknowledge on some level that, as much progress hasn't been made as necessary.
Thanks, as always, Bloomberg U.S. Politics Editor Kathleen Hunter. Karen?
Thank you, Nathan. It is 6:54 on Wall Street, and Bloomberg Daybreak is brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS. Time for the Bloomberg Small Business Report with John Tucker. John, good morning.
Yeah, Karen, barber shops and salons welcoming customers back. The door open again at Concept Salon on 2nd Avenue here in New York City, but restrictions mean only a few customers at a time. Helio D'Souza is one of the owner stylists there. He joins us now. Helio, since the reopening on Monday, how's business been going?
We were away for 3 months, and we don't really know what is going on with the thoughts of clients, who is coming back, who isn't. We are limited in how many clients we can have at the time. That already creates a situation that is, very difficult for us. And all the precautions of safety and, maintaining 6 feet distance between clients, it's a lot to think and deal with.
How did the first day of business go after 3 months of being shut down?
The first day was a busy day, and we're getting calls, and hopefully it moves on like this. But it's like I said, it's not sure yet.
How has the business adapted? What have you had to do to ensure and comply with the safety regulations?
Well, there is a lot. I have to have an empty chair between each occupied chair. And also we have to be cleansing everything we use. Tools, combs, scissors, brushes, sinks, towels. I wash them, all the time. And we all have face masks. And, it's a lot to be doing that we we did before, but not at this extent.
Helio, thanks a lot. Helio D'Souza, one of the owners of Concept Salon here in New York City. Best of luck also. We're going to continue to bring you stories of small businesses trying to survive and adapt during the pandemic every day at this time right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Small Business Report. Karen, your hair's looking wonderful, by the way.
Oh, well, it is 6:56 on Wall Street. Time for the Bloomberg NJIT STEM Report, brought to you by New Jersey Institute of Technology, providing industry partners with commercially focused research and innovation services through its New Jersey Innovation Institute. Learn more at njii.com. Now let's see what's happening in science, technology, engineering, and math. Google is tweaking its privacy policies. It'll set data to automatically delete after 18 months for new accounts. It will notify its billions of existing users that they can delete their data data too. The change builds on a policy that company made last year to let people turn on a setting that wipes the data Google has on them after 3 months or a year and a half. Before, users had to sift through settings menus to turn off data collection completely if they wanted to use the services privately. California escalating its fight with Uber and Lyft. The issue, a new state law designed to give gig economy workers employee benefits. State and local officials will seek a court order to immediately enforce the measure. California has sued both Uber and Lyft, saying they unlawfully classified drivers as independent contractors. And that's today's Bloomberg NJIT STEM report. Bloomberg Surveillance is straight ahead with Tom Keene, Jonathan Farrell, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential conversations from
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment. Feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
Unlike a number of other countries, the Fed is not going to be going negative with rates.
No one at this point, analysts, companies, strategists, portfolio managers, has a great sense for what earnings will be in 2020 or in 2021.
That initial sort of shock effect from reopening, which is basically going from no activity to some activity, then I think you settle in at levels where you don't really know where things are going.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning. This is Bloomberg Surveillance with equity futures negative. We're live on Bloomberg TV and on Bloomberg Radio. Alongside Tom Keene, together with Lisa Abramowitz, I'm Jonathan Farrell. And Tom Keene, we have to begin with the words of Texas Governor Greg Abbott. A massive outbreak is sweeping the state.
No question about it, John. Peter Hotez, who we speak to often, leading the New York Times article today on the gravity in Houston and really the gravity across the entire Sun Belt. John, it's going to be absolutely fascinating to see how the mayors and the governors buttress up with a Washington that seems to feel like the pandemic has moved on. That's decidedly not the case this morning.
The pandemic has not moved on. And Lisa, we turn to the economic data in America a little bit later this morning. Worst case outcome of all of this is local shutdowns. Best case is we constrain the reopening process for the economy. Neither is positive for the economic outlook.
And we're already seeing that with companies hesitant to rehire people, given the fact that they're seeing business muted as a result of a lack of confidence. We're going to get the latest read here at 8:30 a.m. at the initial jobless claims in the United States. The expectation is for a decline in the pace of filings, still very high, 1.3 million filings expected, and the continuing claims expected to remain pretty high. Also, what I'm watching today, 12 p.m., we're going to hear from SEC Chair Jay Clayton testifying to the House Financial Services Committee. Interesting to hear what he may say about his potential nomination to the U.S. Attorney's Office of the Southern District of New York, given the controversy around that. And later today, we will get the Fed stress test results, possibly indicating whether banks may have to cut dividends. Interesting, John, a lot of people already are expecting that they will curtail those payments. I'm curious to see what the parameters are of a true stress scenario that the Fed is painting for the banks should the pandemic worsen.
Thank you, Lisa. We'll catch up with Alison Williams a little bit later this hour to talk about those Fed stress test results, which come out a little bit later. Let's get the cyclical outlook from PIMCO now, shall we? Down the elevator and up the stairs. Let's bring in Andrew Bulls, PIMCO CIO of Global Fixed Income. Andrew, I just wonder whether that flight of stairs has got a little bit longer, a little bit steeper in the last week. What are your thoughts?
I think it's a long way up. I think that in the United States, different states have been hit at different times by coronavirus. So you started off in the Northeast. You're now seeing other parts of the country. I don't think that's a big surprise, but clearly something to watch very carefully. And in terms of our outlook, rather the things we're used to, economic fundamentals, the health and related, health, vaccine, the shape of the outbreak, etc., is something that's going to be a key swing factor. And then against that, you've got the, almost unprecedented scale of the policy response, which is clearly something that's has been very anchoring for financial markets.
Well, Andrew, whether it will continue to be so, I think, is the big question. You've talked of policy primacy in this outlook. Is that still the number one issue, the policy outlook?
I think so, and we should always be humble, really humble at the moment, dealing with these kinds of events. In terms of the outlook, we've had this big drop. We are seeing improvements. We should have something which feels like quite a strong recovery in the near term, but still that gradual climb to get back to where we were at the start of the year. I think that while we need to watch very carefully the health statistics, the patterns in the U.S. states, you do have a lot of policy support in place. I think that's going to continue to be anchoring in terms of financial markets. We think that there's a real bias to do more on the part of monetary and fiscal policymakers. In terms of how to invest, we don't think this is a time to go out and chase assets where they have already recovered very significantly. But there are lots of good opportunities to buy high quality assets at pretty attractive valuation, or with pretty attractive return profiles. So things like U.S. agency mortgages, or high quality credit, corporate credit, senior financials, that kind of safer part of the spectrum. I mean, I think there's lots of interesting things we can do there.
Andrew, I want to come off of John Farrell's important interview yesterday with Bob Prince of Bridgewater, which is we're now at the zero bound, and certainly the timeline has been extended out to a dampening of the economy, a lassitude to the economy. We're all assuming yield curve control. What if we go the other way and begin to see a real disinflationary tendency where the yield curve control is about too low of rates? What's the likelihood of that happening?
So I think we have yield curve. Stumbling on my words. We have yield curve control de facto already in a number of places. It seems like there's a pretty high chance that you'll see this formally on the part of the Federal Reserve before too long. But looking to anchor the front end of the curve, not the 10-year part of the curve like in Japan, but the 2 to 3 year part of the curve. So that real commitment, it's going to be a long time before they raise policy rates.
We talked to your Anthony Crescenzi the other day, and Andrew, this is a critical question as well. What is the efficacy of yield curve control if they can only go out 36 months?
So I think a couple of things. I think that there's only so much that yield curve control can do when you have such low levels of yields and with the shape of the curve that we already have. So I don't think it's that exciting a prospect. In a world where we get better macro news, good news on the macro front, then it could be important because the Federal Reserve would with the yield curve control would be able to lean against any premature tightening on the part of fixed income markets if that's what they saw. But I would agree with you. I think there's only so much that monetary policy, QE, yield curve control can do, and I think the handover to the fiscal side is the important thing. On negative rates, I think it's unlikely that this will happen in the US. When you look at the costs and the benefits, it's hard to see a great case for negative policy rates. But I think it's helpful for central banks to at least give the impression that they might do that, because again, that is anchoring. If you think there's only a 1 in 10 chance or something, that's anchoring in terms of fixed income markets. So in the event of a very bad macro outcome, it's possible that we could see negative policy rates in the US or the UK, but in the baseline, I think it's very unlikely.
Andrew, given how low yields are, and given the fact that U.S. pensions are still looking for 7 to 8% annualized returns, what's the appropriate annual return target that you see given where we are?
Well, I think that's a very good point. I think that often return targets are too high. We have certainly taken ours down, and what we use in our internal models and our internal guidance. But I think 4 or 5% type levels are more realistic looking at over the next years. At least a lot of plans have come down from the double-digit type returns that they once upon a time had, but 7 to 8% still looks pretty high in terms of starting valuations. And the way we are managing our portfolios at a time when you have some good opportunities, but certainly not cheapness across the board. It's better not to try and push too hard to achieve unrealistic return targets. It's better to be realistic that with a reasonable balance of risk, it needs to be lower in terms of the expectations.
Andrew, I've got 60 seconds on the clock. Forgive me for keeping this one tight, but people think we're vulnerable for another shock here. And I'm trying to work out what the defensive asset of choice should actually be in that environment, with rates already zero and Treasury yields already very low. Where do you go?
So I think the U.S. interest rates. I run global portfolios, and from a global point of view in particular, I still think that U.S. rates remain the U.S. interest rate markets remain the most attractive. If you do have a shock, even without a shift on the part of the Fed to negative rates, there's further for U.S. rates to fall. Whereas when you look at other markets, you're going to need more of a shift in the central bank regime to allow that to happen. So I think duration is one important point. You can look at using currencies as another way to look to have some defense against adverse shocks. But I think at our investment committee, while we look at all different ways to do this, you have to be realistic, and with less of a hedge from interest rates, you need to think carefully about the level of risks you have in your overall portfolio. You need to reduce risk if you don't have the same efficacy of the duration position in your asset allocation.
Andrew, we've got to let you go. Always great to catch up with you, sir. Andrew Balls there of PIMCO. My best to you and the team, the CIO of Global Fixed Income. In this market right now, equity futures off the low, still down around about 1/3 of 1%, off by 8 points on the S&P 500. Coming up on Bloomberg Surveillance, live on Bloomberg TV and on Bloomberg Radio, just a little tease of an exclusive interview with LA Lakers star LeBron James with Business Week. That is coming up next. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. Coronavirus cases are surging in parts of the U.S. California, Florida, Texas, each setting records for new cases yesterday. Arizona hit a peak in hospitalizations. Disneyland has indefinitely delayed the reopening of its theme parks in California. North Carolina put its reopening on hold for 3 weeks. A joint travel advisory is now in effect for New York, New Jersey, and Connecticut. New York Governor Andrew Cuomo.
We are jointly instituting that travel advisory today because what happens in New York happens in New Jersey, happens in Connecticut.
Anyone traveling to those 3 states from areas with high infection rates will have to quarantine for 14 days. A new model predicts the virus death toll in the U.S. will hit 180,000 by October. Congress is in a standoff over police reform in the U.S. The president accuses Democrats of trying to weaken the police. Democrats say the Senate's Republican bill didn't go far enough. Republican Senator Tim Scott and Democratic Senator Doug Jones accusing the other side of playing politics.
They cannot allow this party to be seen as a party that reaches out to all communities.
This was just a way for Senator McConnell to blame Democrats for blocking things.
The House is voting on the Democrats' proposal today. The Democratic National Committee is asking delegates not to travel to the convention. Democrats will hold an almost entirely virtual presidential nominating convention in Milwaukee in August. While Joe Biden does intend to accept the presidential nomination in person, it remains to be seen whether anybody will be there in person to watch. Live from the Bloomberg Interactive Brokers Studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Influential conversations from Bloomberg Television.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
My name is Danya. I moved to Manchester in 2010. I came from Afghanistan. The first school day was a bit tough. I had no friends, couldn't speak English, and felt a bit left out. My high school teacher was very supportive. She matched me up with friends that spoke the same language as me. Having friends gave me a lot of confidence. I felt like I'm not being left out.
Teaching. Every lesson shapes a life. Get free one-to-one support with our teacher training advisors to get one step closer to the classroom. Subject to eligibility. Search Get Into Teaching.
The equity market does seem to be a little bit ahead of my view of the future earnings performance of businesses as we look 6 to 12 months out. And if that's true and I'm right about that, you'll see a rebalancing of that over time.
I think a lot of people agree with him that is true. That was David Solomon there of Goldman Sachs speaking to the Bloomberg Invest conference over the last couple of days. A brilliant lineup of guests for that conference through much of this week. From New York City this morning, good morning to you all. Alongside Tom Keene, together with Lisa Bravitz, I'm Jonathan Ferro, getting you in shape for the price action this Thursday morning, around about 2 hours and 12 minutes away from the opening bell. Here is your price action this morning. Equities roll over just a little bit. We're down 15 now on the S&P 500, negative 0.5% to give you a feel of the bond market. Treasury yields, let's start with a 10-year coming down a basis point. The curve just a little bit flatter. We're down 1 basis point to 0.66% on 10s. You could call it 2. 30-year yield down 2 basis points to 141. So just a little bit of risk aversion creeping in here once again. And in foreign exchange, the euro underperforming, bottom of the pile in G10. Euro dollar coming down around about 0.4%, Tom Keene. A bit of risk aversion building once again through this morning.
There's no question about it. Again, this centers, folks, on 8:30 this morning. Really underplayed right now, but in the news flow, more important for global Wall Street, the jobless claim statistic, and we'll give you complete coverage of that here at 8:30. Right now, on leadership, and it is a leadership that started out of a very difficult, a challenging childhood, and what he did at St. Vincent St. Mary High School in Akron, Ohio, and that was LeBron James leading early. It is something he has continued on. Our Jason Kelly with this important interview with Mr. James on his business enterprises. Here is LeBron James on leadership and the National Basketball Association.
Being a leader is not about when you decide to do it. It's every single day. If you want to be a leader or you call yourself a leader, it has to be every single day that you wake up and you jump out of your bed. And people are going to follow you then. People are going to understand you and understand that you're not perfect, but they know you are true to them. So, you know, my mission has always been that, and it will not change. I will continue to point out things that I know is wrong. If I see it, not only socially, but also with cameras in my face. And I will also continue to lead by example as a model citizen, as a black man growing up in America. So my mission stays the same.
LeBron, I do wonder, I think back to 2014 and Eric Garner and the T-shirt that you wore, and the NBA has consistently stood behind you and its players in terms of protest. Other leagues have not done that, most notably the NFL. Now the NFL has changed its tune. What do you make of that?
I do know one thing I can speak from is what I'm a part of. And I'm a part of a league with a great commissioner in Adam Silver, and he's always listened to the voice of his players. And I've always respected him for that. He's given us an opportunity to, when we feel something that's very wrong with society, that's very wrong with what's going on in our communities, that we can speak upon that and use the NBA shield to back us. And I have nothing but respect for Adam Silver. As far as the NFL, I'm not in those locker rooms. I'm not with those guys, but I do understand that an apology, I have not heard a true official apology to Colin Kaepernick on what he was going through and what he was trying to tell the NFL and tell the world about why he was kneeling when he was doing that as a San Francisco 49er. So I just see that to still be wrong. And now they are listening some, but I still think we have not heard that official apology to a man who basically sacrificed everything for the better of this world. So I can say that about that.
And Maverick, I wonder about the Kaepernick issue from your perspective, knowing the business world, the endorsement world, the economic element of this. How does that change going forward, given that I think it's fair to say Colin Kaepernick was vindicated in a lot of senses?
Yeah, well, I think, the fact of the matter is Colin Kaepernick did what was on his heart. He did what he felt was right. He took all the right steps. People always obviously look over that he met with the military. I think it was a Marine or maybe even a Navy SEAL that told him sitting was the wrong thing to do, that he should kneel. That's where he actually got the idea. He took the right steps. But I think as Black people, you know, we've been ringing this alarm for a long time. And the rest of the country who are, you know, I happen to believe most people are good, so who are not even racist, have just been hitting snooze on it, because it's just the system has been set up in a way that even if you're not racist, right, that you still perpetuate a system that oppresses Black people.
An important conversation when Jason Kelly started this project in February, but now in this summer of our discontent, exceptionally important to listen to LeBron James, not only on his business affairs, but also on his take on American society. One thing we see, John Farrell, is the indicators of this summer of our discontent is jobless claims moving from 200,000, 220,000 out, still well over 1 million. I mean, that's the key thing. We're way out on that weekly claims number.
The median estimate this morning, Tom, the data that comes in an hour and around about 7 minutes, 1.32 million. It is the persistency, the persistence of these numbers that I think really disturbs a lot of people. And this is what I spoke to Bridgewater about in the last 24 hours. An unemployment rate that might come down from threatening 20% all the way down to 10. But what does a world look like with 10% unemployment if that persists over a long period of time? That's a huge shock to income over, say, 18 to 24 months, that every 3 or 4 months, once again, the policymaker will have to step in. The job isn't over. There's a hard job still to come.
And Lisa, what's so important about this is the disconnect right now between Washington and the states dealing with a pandemic, and even I would say the states dealing with economic slowdown. I mean, I would say it's a primal scream into this weekend for more action by Washington.
Yeah, with respect to state and local finances, for sure. Also with companies looking for guidance on whether to remain open or to close with respect to their potential liability, which is unclear with respect to the coronavirus, in addition to just who's going to come through the door and have confidence. I will just say, with the unemployment claims and talking about what LeBron James was talking about, it is important to note that Black unemployment rates in this country are near 17%, even as white unemployment rates are at about 13%. And this disconnect is raising an increasing amount of concern at a time when you're seeing the haves and the have-nots really see the gap widen. And Tom, I think that this is going to be an increasing focus going forward as the initial wave of layoffs really hit lower income individuals, and then going forward, the second wave and tertiary waves of layoffs. John, this is a huge issue right now.
I agree, and we'll see the data in the weeks and months to come. Hopefully it changes. Hopefully it changes fast. From New York City this morning, good morning to you all. Alongside Tom Keene, together with Lisa Brownbitz, I'm Jonathan Ferro. With equity futures down 16 points on the S&P, we're negative 0.5%. From New York City this morning, good morning. This is Bloomberg Surveillance.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations. So we work very closely with land management companies. So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Stock futures are...
At Halfords, we're here to get you where you want to be. We can replace your battery at over 700 stores and garages, or even at your home or work with our mobile experts, so you can enjoy an engine that starts first time, every time, and start enjoying the open road again.
Are we nearly there yet?
From battery replacements to tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
What if the world listened more? Maybe it could become a better place. Because when we really listen, we start to notice things that don't sound quite right. They might not seem obvious at first, but listen closely and they stand out like a sore plum. And the more we listen, the more we learn. Our ears help us find belter solutions. And things can change from this to something a little more like this. The new Honda Jazz is a hybrid. Honda, the power of dreams.
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and on Bloomberg Radio alongside Tom Keene, together with Lisa Bravis. I'm Jonathan Ferro. 2 hours away from the opening value price action shaping up as follows this Thursday morning, with equities lower by 16 points for the S&P 500. We trim a little more weight off the S&P, down 0.5%. In the bond market, yields lower, the curve flatter. Once again, down 2 basis points on a 30-year to 141. Down a basis point, maybe 2 on 10s to 0.66%. In foreign exchange, dollar strength against half of G10 at least, including against the euro and the yen. Euro dollar coming down 0.4%. Your focus 1 hour from now is the data in the United States of America, and initial jobless claims and continuing claims as well, Tom Keene, still set to remain elevated.
I'm glad you mentioned that, John. Continuing claims, folks, is a very different statistic from the weekly jobless claim statistic, 20 million-ish or so. It'll be interesting to see that dynamic here at 8:30. This is a joy. He comes to us today within the vicinity of his Colby College, and he comes to us from BNP Paribas, where he does global allocation. But far more than that, Mark Howard was an institution at Lehman Brothers for years in credit analysis. We're thrilled he could join us this morning. Mark, I'm going to cut to the chase. There's no real yield. There's barely any nominal yield at all. What's a retiree to do?
Hey, Tom, that's a great question, because I think even the real yield that is there is a little bit illusory. For example, if you strip out some of the distressed assets in the high yield market that a sane person wouldn't normally buy, the remaining yield or spread is really quite average, if you will, in the scheme of things, looking over time. So I think a retiree is supposed to be diversified. They're supposed to own equities perhaps a little bit more than they normally do. And they have to be very careful to keep dry powder to buy dips like we had yesterday, because the way to generate return, the way to generate alpha, is to be fairly nimble. Unfortunately, this is a very odd market, as John has talked about on many occasions. Policymakers are really distorting things, and that makes it very difficult for retirees.
Well, John does that on his property, the real yield. We're looking for that, folks, to come back sometime in 2022. Mark, thank you. Mark, I want to look right now when I look at the yield dynamics. There's a one-way bet right now in conversation about higher yields, yield curve control, etc. Do you push against the one-way bet and look for yield stability or even lower yields?
Tom, I think that there's a short term and there's a longer term. We do think that there's probably going to be some give back and perhaps a bit of a rally in yields, but ultimately over into the fourth quarter, as we have election uncertainty and other noise in the marketplace defensiveness. But longer term, we think central banks are going to really keep pressure on yields, and it's going to be hard to fight that tape. That's a tough one to fight against.
Mark, there's a real worry about the instability in some of the states across the United States right now, and I just wonder a little bit more deeply. If the United States becomes a source of instability in the months to come, what does that mean for the primacy of dollar-denominated assets?
It's a great question, Jonathan, and I hear that increasingly from global investors. We've seen quite a bit of money flowing into Europe, for example, recently, reflecting both a more active ECB, better growth data, and underlying that issue about whether the currency tailwinds might be better in Europe than in the U.S. But the dollar's been surprisingly resilient, and as you know, a lot of people expect one more round of fiscal stimulus, particularly as the administration looks to bolster its re-election chances. So, it's hard to see the dollar giving up a lot in the short term, but longer term, yes, that dollar primacy is at some risk, particularly depending on how the election goes later this year.
So, Mark, is that basically your way of saying that you currently are still betting on U.S. dollar assets ahead of others, or does this mean that this is sort of a medium-term bet on Europe? How are you positioning?
Well, as one of your earlier guests, Andrew, said before, in a risk-off, treasuries still hold a lot of allure, as does high-quality credit. So, in the shorter term, not that we expect a major risk-off, but we wouldn't be surprised to see a pullback over the quiet summer months when liquidity is less, and as investors position for Q4, we think the dollar will remain resilient. So, we're not anticipating a big move. We do think structurally, the dollar is a little bit expensive versus the basket and versus the euro. Longer term, there are very real questions about dollar primacy, but we're not staking big allocation bets on that until we get closer to the election and have more clarity around that.
Mark, you talked about central bank distortions, and there is this feeling, don't fight the Fed, go into riskier assets because yields will remain ultra low, and they're going to keep pumping that prime to get asset prices higher. At what point does that fall down as we see the highest pace of bankruptcies in the U.S. since 2009, with Chuck E. Cheese filing for bankruptcy this morning?
Yeah, Lisa, it's a terrific question, and increasingly we're seeing fund managers, the big major fund managers, acknowledge that rates, much of the mortgage market, the investment grade credit market, even part of the BB market is hugely distorted, and that's not just in the U.S., but it's in Europe as well. And so equities are the one place to kind of to pivot or to swing your risk allocation, and the very low end of the high yield market. Of course, that's not liquid enough to do very tactically. So we do see the potential for, particularly as we see the second wave of corporate stress, right? The first wave were the most directly affected companies, the airlines, the cruise companies, lodging and the like. The second wave are going to be the ones that are exposed to have been basically broken, either from a business model or from a balance sheet standpoint. And that's where you're going to see more bankruptcies, particularly in the energy patch, but also in retail and in other sectors. So I think you see more dispersion, Lisa. I think you see more differentiation between winners and losers, and then ultimately consolidation through the bankruptcy process.
Only Lisa could fit in Chuck E. Cheese, and our guest would call it a great question still. That's something Tom and I seriously can't do. Tom Keene, for me right now, looking at this data at the moment, there's a serious shift, and we need to talk about it. We were focusing on sequential growth, and I think we all got a slap around the head big time in the last few weeks to focus once again on what's really important, sub-capacity economic growth. For a long, long time, we will be below potential. We talked about the airline sector as just one example. They're going to be below capacity, below potential for months, if not years, Tom Keene, and that's a massive problem for this economy.
Yeah, this is a really, really important question. I should point out, folks, I've never eaten at Charles Cheese. I'll try to get there before they shut down the shop. Mark Howard, what is so important about this is it really goes to the comfort of investment grade. If John gets his sub-capacity economy, does that take out profits and reduce margins, which begins to affect the price of investment grade paper?
Tom, in a normal world, that absolutely would be the case, but we're not in a normal world where central banks are really propping up the investment grade market to maintain, good liquidity in these markets and access to capital. All the major U.S. corporations who needed money this year or into early next for refinancing or for investment purposes have tapped the market. As you know, we've had $1.2 trillion of IG issuance so far this year. The back half of the year is going to be a lot less, perhaps only $400 billion of issuance. So there just isn't the need for this type of, there isn't the need for fresh capital. And as long as the central bank is there buying assets, we don't see a real pullback, only a modest pullback in investment grades. We think it's a safe asset class for the foreseeable future.
Mark, maybe this is off the Mark Howard radar, but I'm going to ask it. I think it is a timely question, folks, and that is of state and city finances in America. How urgent is it in the fixed income space to get our state and local taxation fiscal debt fixed soon?
Well, Tom, you know that there are both structural and short-term issues, whether it's the long-term pension and retiree health issues that plague our municipalities and our states. But in the short term, there are very real budget gaps that need to be sorted out by per law. And I think there's going to be a Band-Aid applied to that in one form or another. No structural fix. And so it's important, but I think Washington is working on it, and I think it will, particularly now with the migration of the virus. It's no longer a we-they phenomena and money being transported from one state to another. We're all in this together. So I think we're going to see some Band-Aids applied to that fiscal situation. But it's a very real issue for a lot of insurance companies, particularly PNCs that are very involved in the muni market, and, of course, for a broad swath of retirees who are active investors there.
Mark Howard of BNP Paribas. Mark, fantastic to catch up with you, sir. My best to you and the team. To you and yours as well. Fantastic to hear from you. Thank you. Lisa Brabbits, the difference between me and Tom. Let's do that. I've never been to Chuck E. Cheese. Tom pretends he goes to these places. There is no way that Tom Keene has ever been to that establishment in his life, Lisa.
Well, hold on a second. No. And the big difference between me and both of you is that not only have I been there, I've had a child who's at a birthday party there. So I have intimate knowledge of Chuck E. Cheese. And I'm fully aware of the fact that you don't actually eat the pizza as much as just enjoy the kids going off and playing the video games. Yes, Tom.
We celebrated Afterthought's birthday at Antico Forna in Venice, and it was just like Charles Cheese.
Yeah, right.
You celebrated the Charles birthday in Venice. Tom Keene, slightly detached from reality as always, alongside Lisa Brabbits. I'm Jonathan Ferro, counting you down to the opening bell. Around about 1 hour and 50 minutes away, with equity futures down 20 on the S&P 500. We're down 0.6 of 1%.
Famiglia.
Here's the price action without the sound effects in the bond market. Yields lower, the curve flatter, down 2 basis points on a 10-year. You're 30 off by 2 basis points as well. In foreign exchange, this is an original market check. Euro dollar coming down 0.4%. A little bit later in the program, looking forward to the conversation with Morgan Stanley's Chetan Iyer. Optimistic and constructive about the future. Will the outbreak of infections in places like Texas change his view? That conversation later this hour as we count you down to the all-important jobless claims in America. 8:30 Eastern, 50 minutes away. From New York City, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. The COVID-19 pandemic is sweeping through the U.S. heartland, setting records for hospitalizations and forcing businesses to rethink their plans to reopen. New modeling predicts the virus will kill 180,000 Americans by October. Some states are imposing face mask orders and internal quarantines, while New York, Connecticut, and New Jersey are asking visitors from those states with high infection rates to quarantine for 14 days. New Jersey Governor Phil Murphy says after everything they've gone through, it makes sense.
It's a really smart, common sense step, particularly as we have the three states have really broken the back of this virus.
The travel advisory impacts Alabama, Arizona, Arkansas, Florida, North and South Carolina, Texas, and Utah, but they'll update that list daily as needed. It is another story in Paris where the Eiffel Tower has reopened to visitors after its longest ever closure in peacetime, 104 days. The Louvre Museum is set to reopen on July 6th. Senate Democrats have voted down a Republican effort to open debate on a GOP police reform bill. Democratic Senator Doug Jones and Republican Senator Tim Scott, who led efforts on that legislation, each say the other side is more worried about the November election than true reform.
He knew that this vote was going to fail. He wanted to make a political point. That's what Senator McConnell often does, especially as you're moving into an election season.
Instead of going forward and getting what you want now, they've decided to punt this ball until the election.
The House votes on the Democrats' measure today, and Joe Biden now leads in 6 states that were key to President Trump's 2016 election victory. That's according to the latest polls. Live from the Bloomberg Interactive Broker Studios, global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
With the Bloomberg Business of Sports Report, I'm Charlie Pellet. The New York City Marathon, the world's biggest, has been canceled because of the coronavirus. The 26.2-mile race, which would have celebrated its 50th anniversary in November, attracts more than 50,000 runners and about 1 million spectators. It is one of the city's biggest events of the year and a major event for business. Lakers guard Avery Bradley has decided to sit out the NBA's upcoming resumption of the season in Florida. He told ESPN this week he wants to remain with his wife and 3 children, including a 6-year-old son who has a history of respiratory illnesses. By sitting out, Bradley figures to lose a projected $650,000 in salary. And the U.S. National Soccer Hall of Fame has postponed its 2020 ceremony to 2021 because of the coronavirus pandemic. And that's the Bloomberg Business of Sports Report. I'm Charlie Pellet.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
The case we have simulated of a second wave would generate basically zero growth in 2021 as compared to 5.4% growth in 2021, which we have projected. So that is the classic L-shaped, non-recovery, and that would be a really dire outcome. And we're getting then even closer to Great Depression levels than we already are.
The non-recovery. Gita Gopinath, the IMF, the chief economist from New York City this morning. Good morning to you all. Alongside Tom Keene, together with Lisa Brabis, I'm Jonathan Ferro, live on Bloomberg TV and on Bloomberg Radio. Let's get straight to the price action in the market. Equities rolling over, down 25, call it 26 points on the S&P 500, down around about 0.8% as the session grows older. The dollar growing a little bit stronger. Euro dollar now down by 0.5%. The dollar stronger against the bulk of G10. And in the bond market, yields come in just a little bit more. This curve a little bit flatter. We are down by 2 basis points on 10s, down 2 basis points on 30s. Your yield at the front end, even the 2-year, comes at a single basis point. Your yield there 0.18%. But once again this Thursday morning, Tom, just a little bit more risk aversion building going into the cash open.
Well, John, it's nicely correlated, too. First thing I looked at was Swiss franc against euro, and even that safe haven has come in as well. But as you point out, dollar strength is there, John.
Yeah, I thought it was really interesting in light of that, what your conversation with Bob Prince of Bridgewater yesterday seemed to indicate, this sort of bet on reflation. How does that pair with sort of the disinflationary feel that we have in markets today, especially as you look at five-year break-even rates, which are coming down at only 1.5%? How do we sort of gauge the sense that yields are going to be ever lower, that growth is going to be slower, with this idea, John, that we're entering an era of eventual inflation? This is what I'm struggling with today.
Yeah, the belief, I think, perhaps that policy is going to have to be that much more forceful over the next 18 months, Tom. Yeah. We have this massive duration gap, in the words of Bob Prince, between what policymakers have done so far, a 3-4 month band-aid, and the duration of this shock, which could go for a year and a half. For me, what's interesting about this week, Tom, the big change is that the tolerance of policymakers has really been tested. We've seen the shift from Governor Ron DeSantis in Florida. We've seen the shift from Governor Abbott down in Texas. On top of that, we've seen corporations start to move as well. Apple last week, Disneyland California now delaying their reopening plans too. All of that just incrementally negative news for this economy, Tom.
And what's interesting about that is where Washington places in all this. One of the things we know is among the stresses of this very serious pandemic and the stresses of the market is some form of measurement of how our banks would do. Allison Williams joins us right now with Bloomberg Intelligence as we look to stress tests today. Allison, I remember us standing by our Otis Bilodeau by the Bloomberg terminal as the first day of those first stress tests came out. That seemed like a really real, immediate, real-world experiment. Does today have even a shadow of that intensity?
I think it does, and I think that, if you want to think about it long term, the fact that these tests were put into place provide us with this framework to see today, what the regulators think in terms of the bank's ability to withstand this severe stress, given this really unusual and unprecedented downturn.
Are there profitability at threat? Is there profitability a threat?
Their profitability is a threat. And, I think the main factor that everyone will be focusing on, the factor that we've been focusing on is, the provision for credit losses. One thing that we've seen in this real-time experiment is that the capital market side of things have held up better. So trading revenue has been really strong at some of the larger banks, including for 2Q. We know that that's going to help to offset the provisions. However, obviously that had a lot of help from the Fed and fiscal response help that has gone into the market. For the stress test today, what we will learn is, how their capital will fare with a set of scenarios that were sort of designed before the pandemic took hold, and that's sort of the really detailed results that we'll get, the results we get every year, how the banks fared in this hypothetical scenario that tests both the earnings side and sees how the capital holds up. The more interesting test is sort of the added layer that was put on. It's different than the prior test in that there's 3 different scenarios. As you were all discussing, it's really the shape of the recovery, the depth and length of the recession that's going to decide how bad the provisions are, and that is what regulators are going to be testing. Unfortunately, we're not going to get the same level of detail there. We'll get an aggregate summary, we think. That's what Quarles alluded to on Friday. But what that will do, I think, is sort of frame the question of what will regulators do with regard to dividends, and that's been another key question for investors.
So the question that a lot of people have is, how much is it already baked into markets that banks are going to cut dividends further from here? I'm looking right now at the KBW Bank Index, down 33% year to date. So some of this has already been priced in, correct?
Well, that is the question that we get a lot, but what we thought was interesting, and in fact, we just ran this chart last week when we were doing our preview. If you look at the declines across the bank, with Wells Fargo being the most significant, the declines are actually not too dissimilar to the cuts to EPS to 2021 EPS estimates. In fact, they line up pretty well. And so someone like Wells Fargo, where there's a lot of worry, not because of the capital side, but because of the earnings side of things, they've also seen a much more dramatic cut in their earnings estimates. So it's difficult to say. And I guess the other thing I would add is we've had a couple of asset managers that have cut their dividends. You see sort of the dividend yield spike right ahead of this. That's signaling that there is some risk to the dividend, but the stocks still got hit hard. Keep in mind that there's a lot of investors out there that own stocks just for the dividend, and so there could be some implications there. But to be clear, I don't think we're going to get those types of announcements today.
Alison Williams on the Federal Reserve stress test coming a little bit later today, joining us from Bloomberg Intelligence. Alison, thank you. To get you up to speed on the price action, guys, we're down 22 on the S&P 500. We are negative 0.7%. A little bit of risk aversion building once again, Lisa, following the shift, I think, really, in the rhetoric coming from governors in places like Texas, a massive outbreak sweeping the state.
And the idea that companies are taking action regardless of any official shutdowns as they wonder about their liability and watch their foot traffic evaporate in the heels of the virus.
More still to come right here on Bloomberg Surveillance, live from New York for our audience worldwide. We're heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
What if the world listened more? Maybe it could become a better place. Because when we really listen, we start to notice things that don't sound quite right. They might not seem obvious at first, but listen closely and they stand out like a sore plum. And the more we listen, the more we learn. Our ears help us find better solutions.
things can change from this to something a little more like this. The new Honda Jazz is a hybrid. Honda, the power of dreams.
If you want to find out what the best laptop is for all those video conferences with your colleagues while sitting at your makeshift desk, you could ask an algorithm, or someone called Al, or Luth, or Ange, or one of our other tech experts on Shop Live, Curry's PC World's online video call experience.
Hi, it's Colette. Do you need some help finding the right tech?
Isn't it nice to get advice from another human being? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
How do hockey fans know what day it is? Just turn on the Locked on NHL podcast, where our rotating cast of hockey experts guide you through the week with a different theme show for every day. From big news Monday to recap Friday.
But we've got a couple of news items that are noteworthy in the NHL in the last week, one of which is below the NHL, and we'll bring that up first. So the AHL announced officially, this has been speculated for weeks and weeks, but the AHL...
Search Locked on NHL on TuneIn to listen. To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Home alone or with housemates, stay home as much as possible. Try to allow only people you live with into your home. Wash your hands. If you're sick, stay home and isolate from housemates. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
You have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
Unlike a number of other countries, the Fed is not going to be going negative with rates.
No one at this point, analysts, companies, strategists, portfolio managers, has a great sense for what earnings will be in 2020 or in 2021.
That initial sort of shock effect from reopening, which is basically going from no activity to some activity, then I think you settle in at levels where you don't really know where things are going.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene are simulcast to you across this nation and worldwide as well. Lots of interesting things going on today. But the number one thing now, without question, is a deteriorating tape in the last hour. And all of this, what is front and center in the United States, is a reaffirmation of the first wave of the pandemic. And yes, other issues on the virus worldwide, including in India, for example, Bombay shifting to really grim news out of Delhi, a flare-up in Tokyo as well. John Farrow, in the United States, I'm sorry, there is no other topic than this pandemic.
Totally agree, Tom. We're claims 30 minutes away as well. We face an elevated, long period of elevated unemployment, and that's worrying. What we need is a clean reopening so we can bounce back quickly, and hopefully the temporary job losses don't become permanent. From an economics perspective, that is why the pandemic and the fragile data in states like Texas is so worrying, Tom. If it constrains the reopening process, if it reverses it, worst case scenario, we face a lot of pain for a lot of people.
And I'm going to suggest, John, you put separately there the pandemic and claims. I would link them quite closely together in that there is an assumption in the markets that claims is on a linear path to a better statistic. Who can make that assumption now with the news of the last 3 or 4 days?
Nobody can, Tom. I would put them together as well. And I think that was the problem with the data we'd seen in the first few weeks of May going into June, or the last few weeks of May going into June. You can't extrapolate out the bounce. You just can't do that. The bounce is mechanical. It's almost guaranteed. You go from closed to reopening. You've got to work out what the future reopening plans look like, how quickly we can normalise. Yeah. And quite clearly what we're learning over the last couple of weeks, Tom, is it's going to be really difficult to normalise. It will not be a straight line.
One of the things I've noticed, folks, and Lisa Bramwitz, I think this is really, really important, is you get one-way bets on different things, maybe strong renminbi, weak renminbi, whatever. But Lisa, what I find fascinating is the varied opinions of how the yield curve and interest rates will price in this concept of inflation to come and also yield curve control. There are a lot of different opinions out there, aren't there?
People arguing for disinflation or deflation and then outright inflation. And there's a time frame issue, right? In the near term, there is a disinflationary trend. People are not getting paid. They're getting laid off. The economy is going to be hurt for a long period of time. The question is, will the federal government print enough money and come out with a fiscal stimulus that's big enough to inject some inflation in an economy that really hasn't seen it for over a decade in any real sense, Tom?
We'll bring you the claims statistics as well here at 8:30. And I do want to mention our important interview with LeBron James, our Jason Kelly, speaking with Mr. James on his business affairs and, of course, the state of this nation. And you'll see that across Bloomberg all today towards the show tomorrow night on Bloomberg Business Week. Right now with us, Sebastian Page of T. Rowe Price, of course, the venerable buy-side institution of Baltimore, Maryland, and we're thrilled he could be with us for a mid-year correction. Sebastian, within all this turmoil and the record uncertainty, how do you reframe for the second half of 2020?
Well, Tom, we just had our asset allocation committee meeting, and we will remain neutral for now between stocks and bonds. You were just talking about the key risks with the reopening, and those are all very immediate risks, the pandemic and the reopening risk. And the only thing I would say there, it's a significant risk, but we also have to contrast the statistics on the number of deaths and hospitalizations, and there's a risk there in Texas that came out this morning, with the number of cases themselves. So there's interpretation in the data and nuance, but it is a risk. Then the election, for the second half of the year. And then just generally the uncertainty on the pace of the economic recovery. And this is where sentiment matters. What is priced in with respect to what's going to come out? We're just talking about unemployment and claims data. I listen to your show a lot, and every guest on Bloomberg Surveillance was pessimistic about 6 weeks ago, right? The refrain was, we're not getting a V-shape and it's going to be really, really slow, more than people think. But recently you've seen a little bit of a reset of expectations on the upside. So that kind of gives us pause, actually, because we tend to lean against the wind. So we're willing to take some cyclical exposures in our portfolios for the second half of the year, and we typically take a 6 to 18-month horizon under the hood of a neutral stocks versus bond positioning. So we'll have slight overweights to small caps and emerging markets, for example.
What does leaning against the wind mean in an environment like this, Sebastian?
Generally speaking, it means looking at valuations. Now, in this environment, it's very hard to look at valuations because the fundamentals are very hard to estimate. But let's look at emerging markets, for example. Emerging markets, if you look at just forward PEs, and again, the data is not perfect, right? But relative to the U.S., they've essentially never been that cheap if you look at, say, 15, 20 years of data. So we're talking 99th percentile valuations in favor of emerging markets. So that's an example of where you could lean against the wind. But in the current environment, it's not just about valuations. It's also about, of course, the macro. The macro could be could be favorable for emerging markets as well. You know, we expect a weaker dollar, and just generally speaking, coming out, if you use business cycle models, coming out of recessions, emerging markets tend to do well, and sentiment could turn favorable if you take the 6 to 18 month horizon. So, Jonathan, that's an example of how we would think about leaning against the wind. Look at how extreme some of the valuations are, and then look at the other factors, fundamental, macro, and sentiment.
So looking at the fundamental factors, we're just getting news that Macy's, for example, is planning layoffs that are roughly 3% of the total workforce. This plays into this feeling that as this goes on, as the sentiment sags in the face of those higher virus counts, the layoffs will only continue to mount. From your perspective, are official shutdowns positive for sentiment, given the fact that perhaps it will shore up some confidence that the virus will get stymied and get curtailed? Or are they negative, given the fact that they could spread fear further?
It's clear they're negative, and it's clear that the news flow for sentiment over the last couple of days is negative because there's just so much uncertainty just about the pace of the reopening, right? If you just zoom out and take a longer time horizon, this is fundamentally more of a temporary shock than other economic shocks we've had in history. But day to day, I don't think there's an expectation that we'll go back into full nationwide lockdown, but it will be a bumpy road towards reopening. And that is definitely negative for sentiment. But if you're kind of a longer term investor, again, going back to the idea of leaning against the wind, it gives you an opportunity to do that when valuations get really, really stretched. Right. You know, yep.
Sebastian, the heritage of T. Rowe Price, just one final question if we could, is growth. How do you deal with the mega growth stocks right now? How does T. Rowe Price deal with these stocks that just go up and up and up?
You know, for us, growth remain the secular winners. But going back to valuations, that's the most kind of worrisome aspect of the value growth decision. Just look at the performance of value on your Bloomberg year to date, right? Minus 17%, and relative to growth over the last 12 months, 30%, Tom, 30% underperformance value relative to growth. So we like the fact that growth are secular winners, and we're investors in growth stocks. But if I talk to some of our bottom-up portfolio managers, some of them are starting to hedge some of these exposures with more cyclicality in the portfolio, looking at financials and energy stocks, for example. Us, as asset allocators, we're going to be neutral for now between value and growth. Now's not the time to be a hero in either direction between value and growth stocks.
Sebastian Page at T. Rowe Price, some really good advice. Tom, we've talked about this so many times. A moment for humility. Be humble. There's so much uncertainty out there, such little clarity, radical uncertainty, I think we can call it, looking out through to 2021.
Well, not only the equity market seeing small caps move, John, but, you know, this whole debate about when to buy value seems to be a critical distinction here into the second half of the year. But also, John, I would look at the yield market, and just in the last hour to see the 2s10 spread, that vanilla difference in yield between the 10-year and the 2-year compressed down under 48 basis points, again shows that new tension in the market this morning.
We discussed it moments ago, Lisa. We came into June, the rotation, the cyclical reopening rotation in the equity market, the steepening that was coming through in the Treasury curve. Lisa, those two things just really starting to stall, starting to fade in the last week or so.
And what I'm struggling with, and very much so, is this idea that if we don't get official shutdowns, you get an ongoing shutdown de facto by companies, with Walt Disney, for example, saying that their Disney World and Disneyland aren't going to open for a little bit longer. This idea of how long will this drag on U.S. economic growth in a way that perhaps is very difficult to model and will continue to create a lot of pain on the jobless front.
This is why this has been a massive reminder, Tom, over the last week to focus on how difficult normalising is going to be. We mentioned that improvement in the economic data. We had a series of huge upside surprises. It kept people focused on the good news, the sequential improvement, month on month on month on month. We're reminded to focus on how difficult it will be to normalise in this economy, not just because the policymaker tolerance will be tested, as we see right now in Florida and Texas, but also because of what Lisa describes. Corporations will make their own decisions. They'll get out in front of this as well.
I totally agree that the corporations will be far more elastic and responsive, John, than anybody imagined. I think that's one of Gina Martin Adams' core themes at Bloomberg Intelligence.
Jobless claims around about 18 minutes away in the United States of America. Full coverage right here on Bloomberg Surveillance. We're down 22 on the S&P 500, negative 0.7%. From New York, this is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Tom, good morning. Coronavirus cases are surging in parts of the U.S. North Carolina has delayed its reopening for 3 weeks. Arizona has hit a peak in hospitalizations. Texas, California, Florida all set records for new cases yesterday. Florida Governor Ron DeSantis says young people need to resist the urge to go out.
Let's just be real. I mean, you have what you can put out, but then you also have a divergence between what the requirements are and what the compliance is.
Now a joint travel advisory is in effect in New York, New Jersey, and Connecticut. New York Governor Andrew Cuomo.
We are jointly instituting that travel advisory today because what happens in New York happens in New Jersey, happens in Connecticut.
The travel advisory impacts Alabama, Arizona, Arkansas, Florida, North and South Carolina, Texas, and Utah. Anyone traveling from those states to New York, New Jersey, or Connecticut will have to quarantine for 14 days. You might remember in April, there was so much concern that the Paycheck Protection Program would run dry. The Small Business Administration was signing off on about $25 billion in coronavirus loans every day. Well, as of last Saturday, the program had about $100 billion left. SBA stops taking new applications on June 30th. There's a debate in Congress now about what to do with all of that leftover money from the PPP. We're live from the Bloomberg Interactive Broker Studios. This is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree, you get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
At Halfords, we're here to get you where you want to be. We can replace your battery at over 700 stores and garages, or even at your home or work with our mobile experts, so you can enjoy an engine that starts first time, every time, and start enjoying the open road again.
Are we nearly there yet?
From battery replacements to tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
The programs today are by and large sufficient to cover the income gap for about 3 or 4 months, starting from April. So we're really talking about an amount of money that gets you through the summer. And the problem then is that we're talking about the virus, which has a time frame of probably 18 to 24 months. And so I refer to that as a duration mismatch, essentially the time frame of the virus impact on spending and income in relation to the time frame of how long people can last.
Bob Prince of Bridgewater, the co-CIO, joining us at Bloomberg Invest yesterday. A fantastic lineup of guests and interviews over the last couple of days, and a really interesting conversation with one of the top guys over at Bridgewater. From New York City this morning, good morning to you all. Alongside Tom Keene, together with Lisa Bravis, I'm Jonathan Ferro. 12 minutes away from initial jobless claims in America. In your market ahead of that, we're down 22 on the S&P 500, down 0.7%. In the words of Texas Governor Greg Abbott, we face a massive outbreak across the state of Texas. That could constrain the reopening plans for several states across America. That is weighing on sentiment over the last couple of days. In the bond market, it means lower yields, a flatter yield curve. The 10-year down by 1, call it 2 basis points to 0.66%. And I said this a little bit earlier, as this session grows older, the dollar grows a little bit stronger. The euro coming in 0.4%. That's a weaker euro, Tom. That's a stronger dollar.
Yeah, I'm glad you mentioned that, John. The dollar here, DXY index flows popping up. As John mentions, Texas beleaguered Disneyland, and when Walt Disney will not open Disneyland in Anaheim, the good news is something that may open is the NBA, and that would, of course, include the Los Angeles Lakers. Here is LeBron James of the Lakers on the season to come and the meaning of sports.
I believe that sports in general has done so many great things for communities, for households, bringing people together. And more importantly, like you said earlier, with our commissioner and our league has always allowed us to express values and things that's going on in our lives. So, for us to be together as a league once again, along what's going on right now, it gives us another opportunity to continue to talk about what's going on, the social injustice, the police brutality, Black Lives Matter, and continue to hit home on things that's going on that matters a lot as well. But sports has always been something that kind of galvanized and brought people together and just make people feel, very uplifted. And I know in my community right now, we just, unfortunately, a beautiful 18-year-old girl by the name of Nakia Crawford was just gunned down in Akron, Ohio last week, a week after graduating high school. Just to get people's minds, not saying forget about certain situations, but to just have a breath of fresh air, to have a sense of love, what sports can bring. And I know what I do on a basketball court can bring a lot of happiness to a lot of households, including my own, and including my community and my kids. So I'm looking forward to the season getting restarted, getting back in the Laker uniform, and continue to push the envelope, not only on the court, but off the court, because like I've been telling a lot of my colleagues, a lot of my friends, I won't stop until I see change, and I mean real change for us as a community, as a Black community, both on and off the floor. So my mission stays the same.
Jason Kelly with LeBron James. Right now we move up to jobless claims, and we of course do that with our chief international economic correspondent, Michael McKee. Michael, what is a distinctive item in this weekly data you will look for here in minutes?
Well, Tom, you basically have to look at continuing claims. We want to know whether or not they are still rising, flattening out, or going back down. In other words, is there any hiring going on? The problem that we have now is this wave that is going through the southern states across the country is going to distort those figures, because we don't know that anybody is getting rehired there, or people will have been rehired and then the restaurants close again. That's the kind of data we're getting from Open Table, that reservations are going down. And in that case, how does that show up in the data? Do people go back on unemployment? It's really going to be hard to read these numbers today.
And it's been hard to read a lot of the numbers. I'm wondering, Mike, what insight we're getting on the composition of jobs that are getting cut at this point from a wage standpoint.
Well, it's largely been, the leading edge has been, Lisa, that it's been service industry jobs, particularly in the restaurants and leisure category. There are a bunch of people now who work at Disney World and Disneyland who aren't going to be going back to work right away. So are those people getting benefits right now? Do they go back on benefits? Was there any kind of effort by Disney to give them something in the meantime? It's really hard to tease that out. We also get durable goods orders today, and they're going to reflect, they're for May, they're going to reflect what we saw with the jobs report last month, a big rebound. But does that really mean anything now if we're going to see parts of the country essentially shutting down, even if the governors don't call for it themselves, self-shutting down?
Well, Mike, with that in mind, it raises a really important question: how useful the aggregate numbers for the U.S. economic data will actually be in the coming weeks and months.
They're not going to be very useful, John. Now, if we saw a big change down in jobless claims filings, that might give Wall Street some hope. But it's really all about the virus numbers right now, because the virus numbers lead the economic activity these days. So we can't really look at the data. We try to look at the high-frequency data like Open Table, like the mobility data, things like that. But it's really hard to get a fix on where we are, because this disease is just not going away. Now it's coming back.
Michael, what's the state-to-state variation in the story that you find as you look at each claims on Thursday? Where are we now on the mix of the 50 states?
Oddly, Tom, that falls into the same category of hard to tell, because you get some states like California that see big declines, and then you realize they only report continuing claims every 2 weeks. So you have to wait and parse that out. And some of the state numbers are lagged. So if Arizona is letting people go again because fewer people are going out shopping or to restaurants, we're not going to know that this week. So it's really hard to get any kind of individual number, but we do know at this point that the states that are experiencing additional cases are going to be seeing their economies slow down.
Hey, Mike, stay close, won't you? 6 minutes away from the print in the United States. Your estimate, 1.32 million jobless claims, continuing claims set to come in at around about 20 million, Tom. Still very, very elevated, and numbers you want to see improve, and improve quickly.
It's really important, folks, to put a gradation on these numbers. I'll go to the weekly statistic again. I think John said 1.3 million is the guesstimate. Normal was it would be 210,000. And we would be all upset if it went out to 220 or 230,000, and we would go glass half full if it was 205,000 maybe. And now we are not 10 times that, but let's call it 5 times that, which is John, that's a brutal statistic.
It's brutal for the people that make up those numbers. We've been talking about that over the last several months, and we'll continue to do so. Coming up on the programme, talking to glass half full, the more optimistic, constructive view from Morgan Stanley's chief economist, Chet and I, will be joining us on Bloomberg Surveillance, and we'll bring you the numbers, the data in America, initial jobless claims just around the corner. Alongside Tom Keene, together with Lisa Abramowitz, I'm Jonathan Ferro, with equity futures down 21 points. We're negative 0.7%. This is Bloomberg.
Debbie Hart Hart is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason that companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, they've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
This is a Bloomberg Money Minute.
Different adapts, different overcomes, different keeps moving, different keeps thinking, different stays connected, different never stops dreaming. The University of Northampton invites you to a virtual open day for a taste of all the benefits of studying with us from this September. Search University of Northampton Virtual Open Days. It's the future, but different.
At Halfords, we're here to get you where you want to be. Why not book an MOT to get you safely back on the road? With over 600,000 carried out every year at 350 garages, you can always count on our experts. And get back to visiting those you've missed the most.
Hi, Mum.
From a safe distance, of course. From MOTs to battery replacements and tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda. The power of dreams. Connectivity subscription available in selected grades.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and on Bloomberg Radio. Alongside Lisa Brammett and Tom Keene, I'm Jonathan Ferro, counting you down to the data in America as we await jobless claims. They drop across the Bloomberg terminal. Let's get the numbers. Here is Bloomberg's Mike McKee.
Well, John, as a lot of people feared, jobless claims come in worse than expected. We've had a surge in the southern states in the virus, so we have a surge in jobless claims, 1,480,000. That is down a bit from last week, 60,000 lower than a revised level last week of 1,508,000. However, we are seeing continuing claims down to 19,522,000. So we'll have to wait and see if in a week or so those move up again, if the overall jobless claims numbers are moving up again, because continuing claims come in a week later. The one thing that we want to keep an eye on, too, is the pandemic assistance, the assistance that goes to people who are not normally eligible, the self-employed, the gig workers. That goes down by 42,000, but still 728,000. So we still have a lot of jobless claims, well over 1 million, almost 1.5 million, as the economy still struggles to get out from under the virus. Other numbers just out now. Durable goods orders were expected to come in up 10.5% for May. They're up 15.8%. We'll have to look at the breakdown and see what pushed them up a little bit extra. But the number everybody watches, capital goods orders without defense orders and ex-aircraft up 2.3%. That was down 6.1% the month before. And the good news there is it really doesn't matter because at this point that is May data. It's old data, but you can say that if people were able to go back to work, there are orders to be filled. The question is, when do people get to go back to work, John?
Mike, looking at the data right now and looking at the spillover into the market, we dropped lower on the equity market, down 28, call it 29 points, negative 0.9% on the S&P 500. The bond market, a little bit of a firmer bid, yields in a full 2 basis points. Not massive moves, but we're still struggling, Mike, to really understand the economic data and the distortions, if we can call them that, over what has happened with the Paycheck Protection Program. Mike, can you talk about that, why it has been so difficult to get a read on the data at the moment, especially with the labor market?
Well, we don't have good data on the Paycheck Protection Program. We know how much money went out the door, and we have a rough idea of how many businesses have been affected, but we don't know how many people they hired back. They were supposed to put people on the payrolls for 8 weeks. When did they get the money? How long has that gone? And did people want to go back on payrolls, or were they happy with that extra $600? So we don't have a good idea of the churn in the labor market back and forth. We do at this point get the impression that what we're seeing is still a problem with backlogs of people on unemployment. And we don't know with the continuing claims whether or not that people are falling off the rolls and then trying to get back on because there are problems in the computer systems. It's the best data we have, but it isn't completely reliable, and it doesn't matter if we saw a decline below 20 million. There's still 19 million people getting unemployment insurance, Tom, and so that is going to be a problem for the economy no matter how you slice it.
Michael McKee, thank you. That complete report from Michael McKee, always expected. He delivers again. John Farrow, I want to go to you quickly here. As you mentioned, the 10-year yield. I went to the 2-year yield, and even in that 2-year space with a great stability we have, John, please note how the 2-year comes in a lower yield beneath 0.18%. What do you think of that, John?
Well, Tom, you've got to say yields aren't going higher at the front end anytime soon. We've got an elephant just sitting on the front end of the curve, and that elephant is the Federal Reserve. So sure, we come in a single basis point. I think the real story here for the front end, Tom, is that yields can't go much higher for a long, long time.
Right. The great bet here, folks, is on aggregate demand. That's fancy economist talk for a wonderful phrase by Chetan Aya. He was with Morgan Stanley, and I first saw it from him. Slowballization, not globalization, but slowballization, just the slowdown, the composition of world trade, and of course with the staggering unemployment we see worldwide in this pandemic. We reassess this morning with the chief economist of Morgan Stanley. Dr. Aya, thank you so much for joining us this morning. Geeta Gopinath mentioned the slowdown yesterday with the IMF. You guys have been way out front on this. How slow is slow going to be?
Well, I think, Tom, the most important metric that we are looking at this time is to see when do the output levels get back to pre-COVID levels. And on that front, we are expecting that to happen for the global economy by fourth quarter of 2020, and for DMs to happen by fourth quarter of 2021. And this, we think, will be much faster. So effectively, we're talking about global economy coming back to pre-COVID levels in 4 quarters versus 6 quarters during GFC, and DMs to come through in 8 quarters versus 14 quarters. So it is going to be a sharper recession, but shorter than GFC.
Chetan, a lot of people questioning the concept of a V-shaped recovery when there is so much uncertainty, not only on the medical front, as well as just how the bleed-through effects will be as a lot of people, millions of people, lose their jobs and stay out of work with a demand shock unlike anything we've seen in recent history. Walk us through how we get to a V-shaped recovery.
So there are 2 approaches we are taking to this. First is in terms of framework. I highlighted earlier that we are saying things are going to be better than GFC. And that is because of three reasons. That this is an exogenous shock. We do think that deleveraging pressures will be lesser this time. And the policy response has been much more swifter. It's been strong, coordinated, and aggressive. So those things make a difference this time, and that's what helps the output levels to come back much faster. And then additionally, I think what we are seeing right now is that there has been a possibility for various economies to restart and reopen their economies despite us having the virus still with us. Yes, it means that we still can't quickly go back to pre-COVID levels of output, but it doesn't mean that we stay at the trough levels. And I think that's what we have seen in the last, I would say, call it 4 weeks, where country after country has reopened, and that has lifted the global growth aggregates for us. And so we think that that part is the one which was underestimated by the market and investors. They're getting around to that one, but it's still holding back a lot of investor community on this front. One thing that you mentioned was the unemployment levels are high. Yes, unemployment levels tend to be high at the trough, but if you go back to GFC, actually the consumption numbers came back to pre-crisis levels by third quarter of 2010. So we came in, around 8 quarters. In fact, consumption came back much faster in that period too. So I think that's because of the fiscal transfers that the government provides, and people are underestimating that recovery in consumption.
Chetan, given what's happening in places like Texas right now, how do you input that into your forecast?
So we are seeing a rise in new cases, but we're looking more closely the hospitalization, because you know that there is some aspect of younger people being impacted this time more in places like Florida. And so when you look at hospitalization, it is Arizona, Florida, Georgia, North Carolina, and Texas. These are the 5 states which are seeing rise in hospitalization. So what we are observing is that you will see some constraint in economic activity in these states, i.e. they don't continue to accelerate from here as significantly. But look, the rest of the country does not have that problem of rise in hospitalization, and so you should continue to see improvement in economic activity in those states, particularly the northeastern states. Their starting point of economic activity levels is very small right now, and they account for about 23% of GDP, so it's a sizable section. That's the one which is going to see improvement in activity. And so when you look at economic picture, look at the aggregate picture, and the aggregate picture will show that economic activity will improve, because still there's a large part of the country which is fine and which will see continued improvement in activity. That's the same thing in
Chetan, I've got to follow up on that. Forgive me for jumping in, because there's a little bit of a delay, so forgive me on this. But the aggregate numbers will of course improve because we go from shutdown to reopen, and those powerful forces will present themselves in the aggregate data. But I just think the aggregate data will mask the fragility, won't it? I do wonder how useful aggregate data will be when all it is mechanical improvements in places like New York that go from shutdown to reopen. Isn't the more useful forward indicator looking at what happens to the economies that are in the process of reopening in places like Texas, California, Florida?
No, so there's a nuanced way we read this, because the problem with these states were that they had taken a very liberal attitude and not following some of the best practices like wearing masks and following social distancing. So they did went, because they had very low cases initially compared to northeastern states, they went a bit far aggressive in the way they opened up. If you look at all the other parts of the world, and my sense is that northeastern states in the U.S. will follow more the European path rather than following the southern states. So if there is a way out, you can open without having to go through a resurgence of cases. So I don't think we should use these states as leading indicator and conclude that any other state in the U.S. that will open will follow the same path.
Chetan, always thoughtful. Enjoy your perspective, as always. A brighter outlook, a more constructive, optimistic outlook from Morgan Stanley's chief economist, Chetan Nair. Thank you very much. That's the constructive, glass half full view from Morgan Stanley, Tom Keene.
Oh, no question about it. I think there's a lot of people pushing back against that. I think the research notes of the last 48 hours really buttressed around the claims report, John, are extraordinary. Neil Dudd at Renaissance Macro, always optimistic, puts out a blistering paragraph saying these claims back to back just aren't up to snuff. And that comes off of Dan Elpert yesterday, of course, his wonderful book, The Age of Oversupply, saying, John, we're going to see difficult labor statistics into September and October, and they are really pushing against Dr. Aya's view.
Yeah, I understand that the likes of Dan Alpert are looking at the distortions that come from the Paycheck Protection Program. And Lisa, it has been really difficult to reconcile some of the improvements that we've seen elsewhere with just the persistence of the economic data that comes from claims. It has been awful and continues to be awful when you look at the claims data.
1.5 million new jobless claims is not normal. Nothing about this era is normal. More than 40 million jobless claims filed in the past 3 or so months. John, my ultimate question is, shutdowns or not, if you have consumer traffic and consumer sentiment not there as a result of spiking virus cases, then, John, we're not going to see the jobs market improve anytime soon in a meaningful way.
Couldn't agree more, Lisa. Could not agree more. Looking at this market this morning, and good morning to you all. Equity futures once again rolling over just a little bit on the S&P 500. We are down around about 20 points, off by 12 on the NASDAQ 100. Up next on this program, the conversations continues from New York. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. The COVID-19 pandemic sweeping through the U.S. heartland, setting records for hospitalizations, forcing businesses to rethink those plans to reopen. New York, Connecticut, and New Jersey asking visitors from Alabama, Arizona, Arkansas, Florida, North and South Carolina, Texas, and Utah to quarantine for 14 days. They say they'll update that list each day as needed. The economic recovery in the U.S. showing signs of weakening in some states where the coronavirus cases are mounting. Michelle Meyer is head of U.S. economics at Bank of America, telling Bloomberg News they are starting to see early evidence things are leveling off in those states that reopened early.
Whether you look at it in terms of some of the high-frequency data around consumer spending or small business openings from a variety of alternative data sources as well, things are starting to kind of peak out, particularly in the states that are further along in the reopening process.
She says the result is likely to be an uneven recovery, and Macy's is reducing its corporate and management headcount by 3,900. The cuts are expected to save about $630 million a year. Live from the Bloomberg Interactive Broker Studios, this is Global News, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Don't write off office space in major urban areas just yet.
On 9/11, we had major properties downtown, and everyone told us no one would ever come back to a building. No one would ever come back to Lower Manhattan. No one would ever go above 6 floors. And all of those things were wrong.
Bruce Flatt is CEO of Brookfield Asset Management, a big owner of commercial real estate, and he tells the Bloomberg Invest Global Virtual Summit, in the same way that people were wrong about what would happen after 9/11, they're wrong if they think urban areas won't bounce back from the pandemic.
The office is about the social interaction of people. It creates a culture in a business. The spontaneity and the collaboration that comes from an office is incredibly important to a business, and you can't create that by video conference.
And Flatt also says because of the need for social distancing, tenants are actually asking for more office space right now, not less. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Connecting.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
At Halfords, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again and surprise that special someone.
Happy birthday!
From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
So we have to make sure we're doing everything and we're diligent and our citizens are diligent. We also have to make sure the virus doesn't come in on a plane again. Learn that lesson, been there, done that. So we're announcing today a joint travel advisory. People coming in from states that have a high infection rate must quarantine for 14 days.
From New York City, that was New York Governor Andrew Cuomo on the situation in the United States of America, how times have changed and how they've changed quickly in just 3 months. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Brabitz. 3 months ago, Tom Keene, it was all about stopping New Yorkers from going into other states and making them quarantine. 3 months later, it is completely the opposite story.
And I think what's so important here, John, is I really didn't hear a lot of spite from Governor Cuomo today. To be blunt, folks, the government officials of the East Coast states are so exhausted by the last 14 weeks. John, I don't think they've got the energy to be spiteful. They're just scared stiff, as he said, of another round of airplane exits that harm the community.
I would agree. Not spiteful, but worried, concerned, and rightfully so at this point. Looking ahead to the opening bell, Tom, we're down 0.75% of the S&P. Going to continue the conversation with Morgan Stanley. I'll catch up with Mike Wilson, the chief equity strategist. A more constructive view, and let's be clear, he has been right over the last couple of months. I just wonder how the last couple of weeks has tested the optimism of the equity bull over the last couple of days.
No, we will see. There's been a lot of distractions today with these stories, no question about it, in the markets. I'm watching the 2-year yield, folks, more than anything, dipping under 0.18%. That gets my attention. Right now we digress, and we digress to one of the great train wrecks of the last couple of years. And no, I'm not talking about Wirecard in Germany. We're all familiar with WeWork. You know, I made a joke of it, WeDog and all that. And yet, it is a crushing need within American business, and that is office space quickly. Industrious does that. James Hodari joins us right now with Brookfield and others. He's trying to move forward and pick up the debris of the industry after WeWork. James, instead of talking about WeWork, just give me one best practice that WeWork did that you can carry forward. What's the thing within all the criticism? What's the thing WeWork got right that you can carry forward?
I think thanks for having me, by the way. I think the thing that WeWork got right is that companies should be buying their workplace or their employees' workplace experience as a product from an expert provider instead of doing it themselves. That's what they did over the last 20 years with logistics, with manufacturing, with data storage. If you look at any Fortune 500 company, the dominant trend for the last 20 years has been pick something that you're not an expert at, that's a major component of your business, but that is not, your core competency, and then hand that to UPS, hand that to Amazon, hand that to Foxconn if it's manufacturing. And the office is probably the last major domino to fall on that front. They got that more right than anyone realized when they were first growing.
And Jamie, now the question is, how do you package up a virus solution to companies that are trying to plot a return to the office? What are you hearing from companies looking to do this in terms of what they are willing to spend at a time when they don't know how many of their employees will ultimately ever return to the office?
So for 1 second of context, we're the largest premium workplace provider in the country. We have more than 100 locations across 50 cities. So this specific question, the what does a safe return to look like, is what we spent the last, 3 months almost 100% focused on. And when you talk to large companies and mid-sized companies, there's a growing realization that outside of the very largest companies in their HQs or their very largest offices, it's going to be hard to deliver all of the new protections necessary, which is part of why expert providers are helpful. But the more you dig in, I think the first month was all about the physical protections required. Filtration in your HVAC system, physical distancing, enhanced sanitization protocols. And then what I would say is that for most American businesses, there's been almost an aha moment over the last month where they've said, yeah, okay, all of that matters, but what matters as much, if not more, is how our employees feel, is giving them the choice of whether they want to work from home or want to come into the office. And so a lot of the focus right now for businesses isn't on just the baseline of physical safety requirements, but about how to actually put in place programs that empower employees to decide whether they're coming into the office at all or giving them local no commute options. That's where a lot of the conversation is now.
And Jamie, that's a cheaper conversation to have because you don't have to re-outfit your workplace in a way to prevent further infection. How much are you seeing businesses sit on their hands, frankly, and not take moves and just sort of rejigger the composition of the number of people who are actually going to come back to the workplace until there is a vaccine?
I think most companies that we've worked with, and again, it might be a biased sample, are being relatively responsible about this. I think some of the cost lines that come out in some of these reports, I don't think there's a lot of scientific basis for. There appears to be a lot of scientific basis for filtration in HVAC systems, which is expensive but not ungodly expensive. And then most of the additional solutions are around behavior, around protective equipment, around distancing. They're more about employee behavior than they are about specific physical interventions that would be outside of the sort of means of most companies. So maybe I'm being optimistic here, but I haven't seen a lot of evidence of companies shirking their responsibilities to their employees. One really good data point on that front is we run essentially a statistical program about sentiments around the workplace called WorkStat. And if you look at what workers are concerned about, there is the number of workers that are concerned that the behavior of their colleagues will put them in danger is much, much higher than the number of employees who are concerned that their employer won't take the necessary steps to protect them. That's where a lot of the worry is right now.
Jamie, thank you so much for being with us. I'd love to get you back on again. I want to do a more extensive conversation of how Industrious moves forward. Mr. Hodari is with Industrious. It's a really, really important story across this nation right now. Mr. Kudlow, out with a headline before his monthly conversation with John Farrell. The National Economic Advisor says strong V recovery still there. He's very V for Victor's. This on Fox Business right now. Lisa, there's Mr. Kudlow being very V.
Yeah, this expectation that we are going to see a resurgence there in just the economy, not the virus counts. I am struggling with this idea that even if there are no official shutdowns, the bulk of what we have seen in terms of economic activity waning has come from a lack of confidence in individuals to go out and spend.
Yeah.
How do you get that confidence back, Tom?
Futures in negative 20 right now. I'm going to go right to the yields. I can do that on the terminal on my phone. It's no question. Yields coming in. Stay with us. This is Bloomberg. Good morning.
Asset managers who...
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
This is a message from the government. Some businesses are now able to welcome back their employees and customers. To keep everyone safe, it's important you follow government guidance and make your workplace COVID secure. Businesses should carry out COVID-19 risk assessments, put in place hygiene procedures, and help staff and customers keep a safe distance. Talk to your employees, listen to their concerns, and if possible, help them to work from home. Every workplace is different, but by following this guidance, you can get back to business safely and play your part in managing the risk of infection. Visit gov.uk/working safely for more information. Stay alert, control the virus, save lives.
At Halfords, we're here to get you where you want to be. Why not book an MOT to get you safely back on the road? With over 600,000 carried out every year at 350 garages, you can always count on our experts. And get back to visiting those you've missed the most.
Hi, Mum.
From a safe distance, of course. From MOTs to battery replacements and tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
And action!
I was offered one.
Cut. That's not on the script.
I was offered one. Get in.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
If you want to find out what the best smart tech is to keep an eye on your front door whilst out and about enjoying the sunshine, you could ask a machine, or someone called Mac, or Kai, or Rachel, or one of our other tech experts on Shop Live, Curry's PC World's online video call experience.
Hi, it's Ali. Do you need some help finding the right tech?
Isn't it nice to get advice from another human being? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
The first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be.
The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from New York City and points beyond to our worldwide audience. The reopening of the U.S. economy is experiencing fits and starts as key states such as California, Texas, and Florida see a surge in COVID-19 cases. Initial jobless claims came in a little higher than expected this week, but are still trending generally in the right direction. So I guess that's the good news. Equity futures point to a lower opening. Yields come in slightly. The dollar strengthens and crude oil backs off and stays below $40 a barrel in WTI. To get a look under hood of the current equity market, let's turn to Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning?
I'll tell you one group that really jumps out in early trading, Paul, the home builders. I mean, there's been this narrative that they would be holding up okay even if sales of existing homes weren't doing so well. It's consistent with the numbers that we've seen out of the government this week. Then we got some figures out of KB Home that pointed in the other direction. The home builder said fiscal second quarter orders plunged 57%. Wow. Far more than analysts had predicted in a Bloomberg survey. Sales for the quarter also trailed estimates. So you got KB Home down 14%. And then you look at the company's peers. They're lower as well. D.R. Horton, Lennar, Pulte Group, all in the S&P 500. All down about 3.5% in early trading. And then you turn to the airlines. You may be looking at the longest string of declines for the group in a year. I mean, the S&P 500 Airlines Index has fallen for 6 days in a row, and shares of the carriers are lower today. You've got American and Delta down 4% in early trading, Southwest down 3.5%, United down 5%. And then you look at the cruise line owners, they're lower as well. Carnival and Royal Caribbean down 6%, Norwegian down 7%. And to stay with the travel theme, Walt Disney lower by 2.5%. The media and entertainment company indefinitely postponed the reopening of its Disneyland and California Adventure theme parks. Disney had planned to reopen them on July 17th. They're being held up because of the issues that California is facing with the uptick in coronavirus cases. Turning to earnings, you've got Accenture up 5.5%. The technology consulting firm's earnings and revenue for the fiscal third quarter beat estimates. Accenture raised its full-year forecast for operating cash flow while trimming its sales projection. McCormick higher by 1%. The spice maker's sales topped the average estimate for the first time in 8 quarters. Earnings also surpassed projections. FactSet Research Systems up 2.5%. Fiscal third quarter profit at the financial data provider beat estimates while earnings came up short. The company raised annual profit forecasts. And I should point out FactSet competes with Bloomberg LP, the parent company of Bloomberg Radio. Rite Aid higher by 12.5%. The drugstore chain posted a narrower loss and higher revenue than analysts predicted. And sticking with retail, Macy's down 3%. Now, the department store chain is eliminating about 3,900 corporate and management jobs, or about 3% of its staff. The cuts will cost about $180 million this fiscal year before taxes. They're designed to save about $630 million annually. On the deal front, you've got Unicure down 16%. The drug maker made a deal with a U.S. unit of Australian biotech company CSL for a gene therapy against hemophilia B. Thing is, though, the agreement ran counter to speculation that Unicure might sell itself. On the other hand, Ally Financial up 8.5% after scrapping a $2.65 billion deal to buy the subprime credit card lender CardWorks. And one more for you. You remember how Hertz Global Holdings went up after filing for bankruptcy?
Right.
It's happening again with GNC Holdings. The shares are higher by 39%. The day after the nutritional supplement retailer filed for Chapter 11 protection. Now, we should point out GNC is closing as many as 1,200 stores and has agreed in principle to sell itself to an affiliate of China's Harbin Pharmaceuticals, which had been one of the company's largest shareholders.
Bloomberg Stocks editor Dave Wilson, lots of news there, lots of data, lots of stocks to talk about certainly here. One of the stocks that we talk a lot about is Tesla. I'm pulling the BQ screen up on the Bloomberg terminal to get that Bloomberg quote. Year to date, the stock is up 130%. On a trailing 12-month basis, the stock is up 337%. Let's bring in Matthew Winkler right now. Matt's the co-founder of Bloomberg News. He founded Bloomberg News back in 1990. He's now the editor-in-chief emeritus of Bloomberg News. And Matt, you're out with a fascinating column once again, taking a look at Tesla. And I will point out that you are a proud Tesla driver, Tesla owner. But you kind of run some numbers here saying that this could become the most valuable auto company in the world pretty soon, potentially.
Thank you very much. It's great to be with you. And yes, my colleague Shinpei and I did run some numbers, and you really have to look at this long-term trend. And what it's all about essentially is growth. Growth that far exceeds any other company in the automobile industry over the past 5 years, 10 years, any period you look at. And more recently, since 2015, that's just accelerated. And that corresponds with the stock price, because nothing gets investors more excited than growth. And if you look at Tesla's sales growth, it's exponential, it's astronomical. You don't see anything like it anywhere else in the automobile industry. And that's why the stock has appreciated to the extent it has. And by the way, this is not unprecedented. The same thing happened, if you recall, with Amazon. 9 years after its IPO, just about all of the analysts, well, at least 80% of them following Amazon didn't recommend the stock. And, of course, we know what happened there. So it's a very similar story. Yeah. If you look at Toyota just can't match the growth that Tesla is enjoying and will continue to enjoy, not just this year, but in the years to come.
You know, Matt, I look at this. I'm so glad you wrote this up. But I remember that one day under the buttonwood tree, I met Matt Winkler, and I met you as you were railing Congress about CEO integrity in something called Reg FD. How do you buttress Tesla excellence with the shenanigans of their CEO? He doesn't pass the Winkler smell test.
Well, I think just to be on the safe side, what we've tried to focus on is data, whatever data we can get our hands on. If we look at the data, we're looking at the data of the vehicle company called Tesla and how it's performed. As to the idiosyncrasies of Elon Musk, I leave that to other people, to opine on. But this is about, more than anything else, this is about what is the relationship between Tesla and its investors? What is the relationship between Tesla and its customers? And in both cases, it's almost unparalleled. You have not seen a relationship of, if you like, a car company and its investors, and a car company and its drivers, customers, users, like Tesla. Nothing in our lifetime comes close to it.
You see, Paul, how Mr. Winkler answered that rude question so gracefully, which is correlated with the ability of my security badge to work on Monday.
Exactly. This isn't Matt's first rodeo. So, Matt, I noticed in your column, as a former equity analyst myself, I found this nugget in your column very interesting, that, as Tom and I talk to Tesla analysts around the street, if they have a technology background, if they approach Tesla as a technology company, they tend to be bullish. But if they are historically an automaker, automobile manufacturing analyst, they tend not to buy in on this story. And after all these years, that seems to still be the case.
Absolutely. I mean, it's more so than ever, actually. The gap between, if you will, the analyst recommendations who are focused on technology and the analysts who are focused on the traditional, if you will, automobile industry as we know it, which would be Ford, GM, Lear, so forth. That gap is wider than it's ever been. And unfortunately, for the traditional analysts, to their disfavor. In other words, the trend is definitely favored the tech analysts. I suspect, to take your question a little bit further, that it has a lot to do with, the orientation. People who are really focused on technology can see how technology is truly changing the way we behave, how we operate, et cetera. And particularly in the environment we're in now, which is one of increasingly online sales, remote engagement, and artificial intelligence, this is where Tesla has excelled from inception. That's what it's all about. I mean, Tesla couldn't sell its vehicles in many states in the traditional way, even if it wanted to, because the states prohibited Tesla from doing so. So if you wanted to buy a Tesla, you had to do it online. So that was your user experience from the get-go.
Yeah. It's just been just an extraordinary story. I don't think I've ever seen anything like it. Matt Winkler, co-founder of Bloomberg News and editor-in-chief emeritus of Bloomberg News, with a fascinating column today on the terminal. You can get it at Bloomberg.com/opinion as well, talking about Tesla, Tom, and how it's very soon going to be the most valuable auto manufacturer in the world, overtaking Toyota potentially.
It'll be a Dow component, and the doubters will still be there. Bloomberg Surveillance this morning brought to you by Cohn Resnick Advisory Assurance Tax. Are you applying for PP loan forgiveness? Don't leave money on the table or fail an SBA review. Visit CohnResnick.com/loan forgiveness. Right now, let's go to our news in Washington. Here's Amy Morris.
Thank you, Tom.